Hey, what is up, everyone? Broadcasting for the second consecutive quarter that we've done this for Tesla. And I'll just let people stream in for a second. But thanks a lot for joining. Also, if anybody has access to the live chat and could let me know whether or not you can hear me, that would be awesome. Good to see everybody. Thank you for joining. I am hoping this works. If you can hear me, just leave a comment in the chat and I will write a question to. Can you hear me? Let's see if anybody's listening. Just drop a quick comment. Let me know if you can hear me. Welcome, everybody. Come on in. Good to see you. How's everybody doing? Thank you for the like. I appreciate it. If you can hear this, just let me know. Great. Thank you, Graham. Appreciate it. Good to see you here. So Tesla's going to report. In fact, maybe they've already reported. So let's just take a quick look and see if anything. It looks like they're down a little bit after hours, but I have the website up here as well as the Q4 2019 update. Let's see. It's also funny that I said Q4. I just caught that I completely botched that. It's not Q4, it's Q1. Sorry about that. Let me see if I can actually change this. Hang on. Tesla Q1 2020. Sorry for that mistake, but thank you for joining. Appreciate the likes. Good to see everybody. Hey, Kevin, how's it going? I wonder if I should change the thumbnail. All right. So I'm monitoring Tesla's website just to see. Okay, so nothing out yet, but I'm monitoring Tesla's website just to see. And we did a live stream last quarter that I think had like 3,000 or 4,000 viewers. I don't want to misquote that number, but the video's still up if you want to go watch it. And the first page that we went to, this was back when the stock was in the 600s, so it's hard to believe that we're just barely scraping 800 today with everything that's going on in the world. But we went right to the Outlook page, and we went right to their guidance for the full year 2020, where they announced their vehicle delivery number and the fact that it would comfortably exceed 500,000 units. And so we did a little bit of math to try to figure out what the revenue could possibly be. And consensus did move closer to that number. The stock obviously went on a tear from the low to mid 600s to $968 a share was the high. And it's been pretty volatile since then, but we're sort of back up just under 800, as you know, probably if you're listening to this. So anyway, there was a lot of news on the last quarterly release, and I expect that we will have a lot of news on this one too. There's a lot to talk about, including Elon's tweet from today about reopening the country and the backlash that he received for that. I guess it's sort of the same old story. Anyway, if you guys have, special insight into Q4. If anybody has any specific questions going into the quarter or wants to talk about anything in particular, including the things on Twitter, let me know. But the plan is, last time we basically opened up the release in real time, went through the presentation together, read through everything, took a look at just got a request to purchase a channel. That's weird. Anyway, we went through the release. We measured the financial impact from the guidance and listened to the conference call as well. So depending on how people plan on listening to the conference call this quarter, I may or may not just broadcast it or restream it from here, so you can listen to everything all in one place. That might be better for people. And let's just take a look at when Elon is going to get on the mic and talk to us. So they will have a Q&A at 6:30 p.m. Yeah, so that's like 2 hours and 20 minutes from now. So I'm not sure we'll go the full length. Last time we did, we went for like 3.5 hours. The release came out a lot earlier than I was expecting. It came out at like 4:05 or 4:10, which is why I wanted to go live right now. And there are lots of other good channels, by the way, that cover Tesla exclusively. This is not a Tesla-only channel. Hyperchange is one. I know he's live right now. If people want to go check him out, not to promote another channel, a different channel, but Galley's really good, and he almost exclusively covers and follows Tesla. So he's got another live stream going on right now. But I like this community, and I've sent Galley some notes over the months about Tesla, and have joined some of his streams as a viewer. And so anyway, the point is I like our community over here. We always have interesting questions, talk about interesting things. I think we've got a lot of things right when it comes to just thinking about the future, the direction of Tesla. And yeah, I think I'm proud of this content, and am really, really glad that people are enjoying it. So anyway, let's get back to the chat. I see we've got a bunch of people in here, and it's growing. I'm wondering if I should change the thumbnail while I have the chance. But before I do that, let me just give you guys a couple of things. So this is Tesla's outlook from Q4 of 2019, which they announced on January 29th, 2020. And they gave the following guidance. They said that the deliveries for 2020 would comfortably exceed 500,000 units, both due to the ramp of the Model 3 in Shanghai and also the Model Y in Fremont. And they also talked about how production would outpace deliveries in this year. And so, basically what that means is we might get a few more produced cars than we do deliveries. But the guidance was for deliveries. So they said they would deliver in excess of 500,000 cars. They may produce more. I don't think people expected that to be a material divergence, though. So producing and selling about 500,000 vehicles. For context, which I always find really, really interesting, Ford and GM do, 6 to 8 million vehicles per year. The global auto market is about 90 to 100 million, depending on how you count it, roughly 90 to 100 million vehicles a year. So at 500,000, Tesla's basically 0.5%, if you can believe that, of the global auto market. And so that just shows you how much room they have to grow, how far they have to go in order to catch up to some of the majors, and how much growth is embedded into this company if they can get any real type of market share. And that's one of the most interesting things about the story that we've talked about a lot. And so Oliver says, I know why the stock market seems so crazy, so simple. It's the quantitative easing from the Fed. Yeah, I mean, that's definitely a huge part. The Fed has injected trillions of dollars into the bond markets, and has basically printed a bunch of money, mainly through the form of purchasing bonds, which has had the effect of pushing people out on the risk curve, meaning if they can't own bonds anymore because the Fed bought the bonds from them, they have to put their money somewhere. They could put it into cash, which yields nothing, or they can buy stocks. And a lot of people or a lot of institutions are buying stocks. So 5,000 per American joining the obligations market and therefore being freed up, where, of course, to the stock market. Yeah. Well, when you have no other place to put the money, I guess you may as well put it into stocks. Would anybody like to do or like to hear a live stream on Bitcoin? Because I had somebody on a live stream a week or two ago who has bought a bunch of Bitcoin and is interested in it right now. We've never talked about it on this channel, but I do follow the cryptos a little bit. And if people are curious about that, maybe we'll do a live stream on Bitcoin, because they had a pretty interesting thesis. But your comment about the central banks printing money reminded me of the fact that Bitcoin has been on a pretty nice run the last couple of days. And obviously the, popular thesis about, okay, here we go. Tesla results are out. First of all, let's just see if the stock is doing anything. So the stock is up. It went from down 4 to up 1.6% at 813 after hours, 813 a share. So at least the initial reaction, it looks like the initial reaction is kind of flattish. There was a dip, and then it looks like it shot up. The stock shot up kind of right after the announcement was put out. But I would caution people on reading too much into that because the initial move sometimes ends up being wrong. So anyway, earnings are out. If you're just joining, let's take a look at the Q1 update. I'm reading it live for the first time. It's funny. The tab says Q3 2019 update. So I guess they got their titling wrong too. But anyway, the slide is Q1 2020. So here we are. I'm just first going to go to the Outlook page and see if they have one, I guess, and if anything has changed. Okay, so this is crucial. And I just want to make sure that people are still tuned in and that they're watching. Okay, so this is crucial. And I'm going to compare what they're saying now to what they said last time. I have both of them up. But here is Q1 2020. It is difficult to predict how quickly vehicle manufacturing and its global supply chain will return to prior levels. Due to the wide range of potential outcomes, near-term guidance of net income and free cash flow would likely be inaccurate. We will again revisit our 2020 guidance in our Q2 update. So that's a pretty interesting statement. I don't know exactly what people's expectations were as far as what that statement would be, but they have effectively suspended guidance, and the stock is up, about 1% after hours. You'll recall that they had already released their Q1 2020 production and delivery numbers. So 88,000 total deliveries in Q1. So that number won't be a surprise. But as far as volume, they said we have the capacity installed to exceed 500,000 vehicle deliveries this year, despite announced production interruptions. And they had already put out press releases on some of the curtailment of their activities, their vehicle production activities in Fremont and earlier in Shanghai at the Gigafactory 3. For our U.S. factories, it remains uncertain how quickly we and our suppliers will be able to ramp production after resuming operations. We are coordinating closely with each supplier and associated government. So that's new. So basically, volume was expected to comfortably exceed 500,000 units. That's from Q4. Now they're telling us that they have the capacity installed to exceed 500,000 units, but that they don't know what that ultimate number is going to be or what that number ultimately will be for this year because of uncertainty in the supply chain and also interruptions from their various suppliers. I'm going to go quickly back to the stock. Interesting, it's up now 2.7% after hours, and this is after the stock closed for the day up 4% at 800. So after hours, the stock is looking at 824, which is just mind-blowing because I can remember the stock after hours for the Q4 2019 call in late January. The stock was up about 12% after hours in the mid 600s. So now we're $150, over $150 per share above that Q1, January 2020 level. And I think people forget that. Okay, so anyway, near-term cash flow guidance is currently on hold, and we are continuing to significantly invest in our product roadmap and long-term capacity expansion plans as we have sufficient liquidity. So I think that's a really good sign. There was some speculation about liquidity issues, as always with Tesla, and some questions as to whether or not they might raise capital. Model Y production lines in Shanghai and Berlin remain our most important near-term projects. And then again, profit, I guess no surprise given what they said above. Near-term profit guidance is currently on hold. We believe we will achieve industry-leading operating margins and profitability with capacity expansion and localization plans underway. That's an interesting statement because, I think the bulls never questioned that idea. Just going off of memory, at best, I think Ford and GM in this current environment have EBITDA margins maybe in the mid single digits to maybe very, very low double digits. So I don't think more than 10%. But Tesla is saying that they plan to have industry leading operating margins. Doesn't say this year, but that is a positive. And then this is also extremely interesting. We expect the production of both Model Y in Fremont and Model 3 in Shanghai will continue to ramp gradually through Q2. So that's a very interesting statement. That may be what's driving the stock right now. We are continuing to build capacity for Model Y at Gigafactory Berlin and Gigafactory Shanghai and remain on track to start deliveries from both locations in 2021. Lastly, we are shifting our first Tesla Semi deliveries to 2021. So that'll probably be the Tesla Semi news will probably be a little bit of a disappointment to people who are expecting those deliveries to occur in 2020, but it looks like they've been pushed back a little bit. Probably not a surprise to a lot of people. But the thing that is positively surprising me is that the production, so Tesla is saying the production of both the Model Y in Fremont and Model 3 in Shanghai will continue to ramp gradually through Q2. So we're in Q2 right now, March 31st to June 30th. We're almost right in the middle of Q2, and they're saying that it's going to ramp. So that's pretty interesting. I would not have expected that, but that seems good. And let's just do a quick check on the stocks. So now up 3.7% to 830. It's going to be really, really interesting to hear what they have to say on the conference call. And if you're just tuning in, effectively, last quarter they said, hey, we're going to produce comfortably in excess of 500,000 vehicles in 2020. This quarter, Q1 2020, they gave us an update and said they are suspending guidance and that they're not going to provide an outlook right now, but that they may update us on an outlook in Q2. However, they said that they will have capacity to produce in excess of 500,000 vehicles this year. And they talked about production ramps at Fremont, at the Fremont factory, as well as Shanghai, which seem positive. All right, I'm just going to check in, see if anybody has any questions. So Oliver had a question about, hey, what's written about the Semi? I just covered that. Let's check in and see what Tesla Q is saying, or what people are saying about Tesla on Twitter. And this is interesting. I haven't really focused on the actual Q1 earnings because, and here's my reasoning, like for Tesla and for most tech companies, but in particular for any company that's growing really, really fast, most of their value is based on things that they're going to do in the future. So Tesla beat, it looks like Tesla basically beat and did $1.24 of EPS versus the negative 36-cent estimate. But to me, that number just doesn't matter. Like and I would say the same thing if they had missed by $1.24. These near-term earnings for a quarter that is interrupted by a global pandemic are just not, to me, relevant quarters to measure the value of the company. And what's interesting about Tesla, I think, versus companies like GM, Tesla made a reference to the interruptions that their supply chain is going through right now. And think about, we've talked about this in the past, but think about how, relatively speaking, simple a Tesla is in terms of the interior, the electronics, even the buttons and different components that the drivers and passengers use to control the vehicle. A Tesla is so much more simple from a parts and an integration and a componentry perspective versus GM. And so Tesla, who's making 500,000 vehicles, has a simple plate that they're able to build off of, versus GM that has factories all over the world, is selling 8 million units and has a much more, definitionally, just a much more complex vehicle, componentry systems, and is probably going to have a lot more trouble adapting to this new environment. So that's the other thing. A company trading at 20 times earnings, it means that this year's earnings have a 1/120th effect on the value of the company. 19 out of those 20 multiple turns are in the future, meaning the higher the multiple for the stock, the more earnings that there are in the future that people are expecting. So any near-term hit for Tesla that's a growth company, I think proportionally will be much smaller, and the stock is reflecting that right now. People are kind of looking through the suspension of their guidance, probably happy about the fact that they beat on EPS, and I guess we'll look at what happens maybe in Q2 when they give us guidance, and then we have the conference call coming up. So now the stock's up 6% after hours, up almost $50, which is crazy. I wasn't expecting that, but interesting. And I'm just going to go through, how's it going, T. Lansoranks? Yeah, so somebody asked about the semi. I will go to that, and I also just want to take a quick look at the balance sheet to see how their balance sheet looks. So again, here's a chart of their deliveries, and you can see that their deliveries in Q1 2020 were down. They had already announced that number, so that number wasn't a surprise. But you can also see that the Q1 number for 2020 versus Q1 19, and the first quarter is typically a slow quarter for the auto OEMs in terms of deliveries. But in any event, the growth trajectory there for Tesla, despite being down sequentially, is up really, really nicely. Net income is just barely positive, which for the people who are playing, or the people who are expecting or hoping, whatever you call it, but the people that are focused on Tesla's inclusion into the S&P 500, this will be a positive, because I believe, I haven't covered this in depth, it's more of a technical aspect to the Tesla story, but a lot of people have been excited about and have been talking about Tesla's potential inclusion into the S&P 500. I believe one of the criteria required for inclusion is 4 consecutive quarters of positive earnings, and so they just skated by here in Q1, which means that they've strung together 3 profitable quarters. And that's also notable, because they have, to me, Tesla has levers that they can pull to actually increase their earnings in any given quarter. For example, they have a bunch of deferred revenue that they've collected, where they've basically taken in the cash or taken in the payment for FSD features, for full self-driving features, but they're going to recognize that revenue as they roll out the features to the consumers. And so there is a discretionary aspect to when they release that revenue and when they recognize those earnings. And so, maybe in a tough quarter, like Q2 should, in a normal year, be a seasonally much stronger quarter for them. But like possibly this year, they'll pull some levers and release other income, basically in order to boost the earnings. And yes, it would be one time, it would be temporary, but companies do that type of thing all the time. So I certainly wouldn't let anybody tell me that Tesla were gaming the system by doing something like that. So this is quarterly, and then this is 12 months. And let's just take a quick look at the total automotive revenue, which is up to $5.1 billion from $3.7. And this is actually what I came here for. I just wanted to get a quick read on the status of the balance sheet and take a look. So if you remember, Tesla did an equity offering in February, and I think it was $2.3 billion. So they had $6.3 billion of cash in December, in the last quarter, and they now have $8 billion. So there's been maybe a very slight reduction in cash, but that sort of makes sense. And as far as the debt is up. It looks like by $1 billion. On the long-term debt, and up by about 1.7 billion. So maybe I'm just doing the rough math in my head, but about 2.7 billion on the debt side. So their net debt is up a bit. Their net debt is up a bit from where. Oh, excuse me. I was looking. Here we go. Yeah, their net debt is up a bit from where they were in the fourth quarter, but not to be unexpected. And let's just take a look at their EBITDA margins. So this is an extremely, see, this is a really, really positive sign. And maybe we should do some math in a second just so I can sort of show you how I've been thinking about things. And I've released some very simplistic like earnings models on Tesla in the past on my Twitter handle, IFTF6. Just for entertainment purposes only. Don't use it for, or don't misconstrue it as investment advice. But the point is you can go there, you can plug in your assumption about how many vehicles Tesla is going to sell in the future. They would have done about 500,000 in this year, but it's kind of easy to game out what you think they might do in the future. But anyway, you can go there, you can plug in what do I think Tesla's going to sell? What is the average selling price, whether it's $45K or $50K or $35,000 a vehicle? And you can make a margin assumption, and you can very easily get to an earnings number per share. And most stocks, or every stock over time, trades based on the expectation that a company will generate a certain amount of earnings per share. And they typically trade on a multiple of that. And so even right now, I think the estimates for 2021, let's just look at Yahoo. But the estimates for 2021, as far as EPS goes, let's see, like the high estimate is $20 a share, which I think I roughly got to that number. And so, 20 times that is 400, 40 times that would be 800. And for a stock that's growing from $8 per share this year, or would have done $8 per share up to 20, a 40x multiple on a stock that is compounding or growing earnings year over year by over 100% is actually not crazy. Like the point is that if you develop a normalized view on what you think Tesla could potentially sell in terms of units in the future, and then put a multiple on the corresponding earnings, like it's a very sensible, reasonable way to get to a hypothetical stock price for Tesla that, could be a lot higher than these numbers here. Obviously, the global macroeconomic backdrop has presented a little bit of a challenge to the growth trajectory, but it doesn't make it impossible to grow. And in my opinion, they have a much better chance of growing in this environment than the legacy auto guys. The planet just seems a lot cleaner right now. The environment is much healthier. And, one of the things I've said on the earlier live streams is that I just think we'll come out of this, hopefully a more peaceful planet, and we will come out of this putting a much higher premium on having a clean environment, clean water, clean air, good air quality, and electric vehicles are obviously a huge component of that. So Kawhi says, I bought a put. Did I do good? I don't think so, man. But let's just check, and I'll give you an update on how Tesla stock is trading after hours. It's up 8.6%, which is just crazy. The stock right now is up $69 after hours. It's at $869. It's literally close to it's within less than $100 of its all-time ever high. So congratulations to everybody who stuck with this. What an interesting ride. And obviously it's not over yet. A lot can happen, but congrats to anybody that is holding a full position right now. And this person who is anonymous is saying they bought calls and puts, but twice as many calls as puts. And he's saying he knew it was going to move one way or the other. Put options are going to tank in price tomorrow. Yeah, certainly if the after hours price action holds up, this person is right. The puts will completely tank when the market opens tomorrow. And if you have any specific questions about, the outlook, about what people are saying on Twitter, about what I expect Elon to talk about on the conference call coming up in a little less than 2 hours, if you want to talk about what happened last year or last quarter, just drop a comment. And also to anybody listening right now, I would really, really appreciate it if you could leave a like. And if you're not already subscribed, just consider subscribing. There's a ton of content on this channel. And like we did a video on the 1987 crash that's really, really interesting. And we did this before anything happened with the global market now, but just learning about the players from the 1987 crash was really, really interesting. We did a video on that. We've done a ton of videos on Tesla, actually predicting or expecting an $800 price this year. That was the first video that ever came out on this channel. So anyway, if you're enjoying this stuff and want to see more of it, just drop a like, and I would really, really also appreciate it if you could consider subscribing, because there's a lot more to come, and we talk about a lot of different things, and we've switched things up recently just because the world has gotten so crazy, but there's going to be a lot now and in the future, and I would really appreciate it. And Kamel says, great time to have a Tesla stock. Is anybody here a Tesla driver? Does anybody own a Tesla? Have they recently taken delivery of one? Thank you, Armstrong. I really, really appreciate it. Glad you're enjoying things. And feedback is always welcome, too. There's a lot of room for improvement, needless to say. But I figured that I would jump on and do this live stream because, and granted, the world was a little bit different, shall we say, at the end of January of this year. But we had like 3,000 people in total over the lifetime of the stream. And then actually a ton of people watched it afterwards as well. So anyway, I think people really enjoyed it. And thank you for the support, guys. I really, really appreciate it. So let's just go to Twitter and take a look and see what people are saying. But stock is up 7.4%, dipping a little bit. But when I say dipping, I just mean dipping from the crazy high that we got. Crazy shoot up that we got, increase that we got right after earnings were released. And to tell you the truth, I don't exactly know whether this is driven by the beat or like the quarterly beat. They've suspended guidance, so I don't exactly know. Maybe expectations were just very negative heading into this moment. But if you take a look at a 6-month chart, we started here. This channel opened and started right here when the stock was around 414, actually, in the low 400s. And the stock more than doubled. Everybody remembers probably this day, February 4th, that the stock closed at 887, but got like to 968.99 and had a brief dip. They raised equity around here, and we got to new highs a little bit later that month. And then we had this issue that we're all dealing with and facing right now. So the stock sold off. I wish I were smart enough to have bought some at 361. And if I had a very, very strong idea or something smart to say, I would have released a video. I probably should have released a video, obviously with the benefit of hindsight. But anyway, to anybody that scooped up any right here, that was a great buying opportunity. And we're essentially back now to the highs. And the crazy thing is that Tesla does not look like the market. It trades with a mind of its own. And I have a video basically about Tesla stock defying the laws of physics. And that continues to be the case. I think it continues to confound, the performance of Tesla continues to confound the shorts and Tesla Q, the people that still just don't understand the story and for whatever reason are, betting against the company, hoping that they implode, hoping that maybe people don't end up adopting electric vehicles for whatever reason. So let's just go to Tesla, see what people are saying. So Elon did mention earlier last month in March that Tesla was scouting locations for the Cybertruck Gigafactory, and he said that it would be in the central USA, and he's thrown out a couple of tweets, at least one today, referring to Texas and the fact that they were reopening, maybe in a bid to try to curry a little bit of favor with that state or potentially signal to people in the market what's about to come. I don't know. But Tesla and Elon it seems like there's at least somewhat of a dialogue going on between the company and that state. And here our friend bought Tesla at 860. Hope I'm not late to the party. I would love to tune into CNBC. I'm probably not going to do that, but it would be interesting to hear what they're saying. In fact, maybe I will do that just to hear the soundbite and play a little bit of that, just so we can hear it and hear what they're saying. But again, I think the fact that they put up these really strong margins, and this is the thing I was going to comment on. So their automotive gross margin was 25%, which I believe is close to the highest, if not the highest number they've ever put out. And that's the number that Elon has always targeted, which people have criticized him for, saying, you're not gonna hit those margins; they're impossible. So that number includes actually the regulatory or the regulatory credits that they get for producing electric vehicles, and that's sort of non-operating revenue. So if you exclude that, they're in the 20% range, which I guess is actually kind of in line with what they've been doing the last few quarters. But if you consider the fact that in Q1 2019, they put up a 15% number, they just did 5 points higher than that. And so if you extrapolate those numbers, if they can do 5 points higher year over year with volume growth, then the numbers they put up last quarter of around, or the last couple of quarters around 20-21%, tells you that they could potentially get to that mid-20 level. And so that could be, the margins could be another reason that people are excited. So that's it for the slideshow. Let me just go back. We covered the outlook. That was the first thing that we skipped to. I'm not going to spend a lot of time on the energy or solar businesses unless people would like to cover it. But the last bit of guidance we got on these businesses basically pointed to revenue up 50% year over year. That guidance has been suspended, but from a profitability standpoint, that's basically, at least right now, over time it'll grow, but it's not quite as meaningful for the company. Oh, here's another big piece of news. And the Third Row podcast, I saw tweeted this out, and Elon retweeted it. I think this was today or yesterday, but something really, really cool. Have you guys driven Tesla with the autopilot? So I have, and I'll tell you a story about it. But I'm just looking at this here. So the news is that Tesla enabled stop sign and traffic light recognition and braking for early access program users at the end of Q1 and to the wider public in April 2020. As we have done with previous releases of major new features, drivers will be required to confirm their attention in order to continue. Once enough real-world data is collected, the system will become more capable and our vehicles will continue driving through intersections without a confirmation. That is just crazy. I mean, to the people that say the future is not here yet, if you haven't driven a Tesla with the autopilot feature activated, I highly suggest that you go. This is not an advertisement. It's not a paid advertisement. It's just something that I did. I'm not a Tesla owner. But I went to the Tesla dealership in New York City. Some of you will probably know where it is, but it's in the Meatpacking District, just to try a Model X and activate the autopilot system for myself. and give it a test drive, and it drives really, really, really well. I figured if I'm going to be talking about this stuff all the time, I really want to understand what's going on and be able to speak confidently about Tesla and the autopilot features, and they work really, really well. So anyway, that's exciting news. That is one thing, that the system would recognize traffic cones and things like that when I drove it, and would recognize different things on the road, including like if you drove by like a sports car, it would render a sports car. If you drove by a big box truck, it would render the truck. So you could tell that it was accurately interpreting the world around it, but it didn't have the functionality. Of traffic lights and stop signs and things like that. So now it does. So just an update on the Berlin GF4, Gigafactory 4, which is the next one that they're building internationally after they completed Shanghai in 2019, which is Gigafactory 3. In Berlin, they're saying that we recently finished the land preparation phase and are about to break ground on the construction phase of this project. Based on the current progress, we are on track to start the first Model Y deliveries from Gigafactory Berlin in 2021. I don't think that's outside of expectations. That's what I was expecting, and I don't think there's a big change there. Let's just go through the current capacity numbers for Fremont and Shanghai and see if they changed from last quarter. Just do a quick comparison. So Fremont was 90K for S and X, 400K for 3 and Y, and 150,000 in Shanghai. So 90, 400, and 150. And basically the numbers are the same, except Model 3 production actually increased to 200,000. So up 50,000 in Shanghai, which if that's a sign of things to come, in other words, if certain areas of the globe kind of get through the wave. I don't want to talk a lot about the health side of this, but maybe Shanghai is a sign of things to come, that if we get through the wave, and resume growth, that's a pretty significant number to go up 50,000 units in Shanghai. And I'm just going to go back through to see if there are any other interesting tidbits for you guys. Q1 2020. Yeah, so, the adjusted EBITDA margin, which is, the company's profitability as a whole, is up to 16%, which is in line with what they did in Q4. And basically 13% higher. The margins were 13% higher than they were in Q1 of 2019. So that's a huge increase. They more than 4x'd their margins year over year for the first quarter. And I'm just reading through the summary here to see if I can get anything that's incremental to what we already talked about. I mean, they say here at the end, we believe we are well positioned to manage near-term uncertainty while achieving our long-term plans. So no real reference to capital raise or anything else like that people were speculating on. And so I'm just going to go back to the stream, see if anybody has questions. Edwin says he's still learning how to drive the Tesla. That's pretty cool. William says stocks have nothing to do with physics. True. Max says would pay to see Jim Chanos's face right now. Can you imagine, finding, I don't know, if you're somebody who's oriented to be only short, you're a short only seller. Can you imagine Can you imagine shorting the one stock that has more than doubled off of the lows, right? Because the lowest was 360. So what's 2 times that is like 720, and we're over 800 now. So it's up 100% in like a month. Can you imagine being short? And to the person saying that that stocks are not driven by physics, it's just a figure of speech. I know that, or maybe I don't. I don't know. But that's why I have the channel name this way, because everybody who comments seems to be smarter than me. They always bring up good points. So speaking of that, if you have a name for the channel, I do have to change it. It's in brackets. If anybody has any ideas, I will shout out the person who ultimately ends up naming this channel, because it does need to change. I think it's costing us subscribers. I think more people would subscribe if the name was better. But anyway, imagine both companies having zero debt. Would you rather invest in Ford or General Motors? That's an interesting question. You'd have to consider the pensions too. They put a lot of, if you consider labor as one of the capital expenditures required to get these factories up and running, the legacy auto manufacturers have huge legacy costs related to the human capital, the human labor required to produce those vehicles. And, those don't go away. They need to pay those people. Those people worked hard for a long time, and they need their pensions. But the point is that for Ford and GM, the debt that they have is not their only liability. They have pretty large pensions as well. Somebody's asking, did anybody buy options before earnings? And Crazy A says he did 5 hours ago. He bought 20 shares this morning. Congratulations, sir or lady. Nice job. And Oliver saying, too risky, just buy and hodl. Well, hodl's been a good strategy for Tesla. And Tim, I appreciate it, man. Thank you for tuning in. And Rafiz has asked if there's an inclusion into the S&P. Covered that a minute ago. It looks like they've strung together 3/4 of profit to your question. And I believe, I'm not an expert in this area. I've looked into it a little bit, but I haven't done a video on it. It's more of a technical factor that will drive Tesla in this respect. As far as being included into the S&P. So in other words, it doesn't have anything to do with them selling more cars. It's just a technical factor that could affect the stock. I've seen technical things happen weird. I've seen the outcomes, turn out not the way people were expecting them. So it's why I've diminished the focus on that a little bit. But to answer your question, I believe the company needs to string together 4 quarters in a row of profitable earnings. They've done 3 so far, and they do have different levers that they can pull if Q4 is messy or not as good as it seasonally is for them, or would be in a typical year. They do have other levers that they can pull, such as recognizing revenue from FSD, from full self-driving packages, and things like that they can put in. Tesla Bullman. Descriptive names are the best. Yeah, I mean, solving the money problem. It's a good name. A lot of subscribers. Do people watch that channel? Do people watch Galley's channel, Hyperchange? And Felipe saying that he bought 4 shares 4 hours ago, expecting some lucky movement. Nice job. And Siddharth is asking, how is Tesla selling so many cars at a time when oil is at an all-time low and unemployment is so high? Well, they did suspend their guidance, so we don't know how many cars they're selling right now. We don't know what they're expecting to sell in Q2 and Q3. A lot of the Q1 deliveries, I mean, keep in mind that, by the time the U.S. shut down in sort of early to mid-March, we are basically 2.5 months into the quarter, into a 3-month quarter. So for the most part, Tesla was, I don't want to say unaffected, but not as impacted or affected by the shutdown in the first quarter as you would think. And Daniel's saying, think of your brand and make it fit what the channel's about. Good luck. Sold most of the shares this morning, as I think we're sure are due for a massive correction. Thank you for the feedback, and I appreciate that. Yes, Giovanni asks if anyone knows when the call starts. It should start at 6:30 Eastern time, which is about an hour and a half from now. Solving the money problem is a weird name. Q2 is going to be a massacre. Yeah, Bob's is asking, what is the call? Anyone mind explaining? I believe what they're referring to is Tesla's conference call that they get on and just kind of talk through. They take Q&A from investors. They talk about the results a little bit more. Historically, Elon has been, I think, on every single one. He was on last time. Have not checked out Chicken Genius yet. All right, I'm going to open a browser and type in Chicken Genius so I don't forget. Thank you for that. Oh, I do know Chicken Genius. Never mind. Okay, sorry. Let's get back on topic. So somebody's asking, what do you expect for Q2 in terms of stock movement? And somebody else had said earlier that they had sold their shares earlier in the day. Yeah, so I will give you my thoughts on this. And I did send out a tweet. And one of the last videos that I actually released made a reference to this as well. And actually, I'll probably just pull up my Twitter and read it because I posted this. Typically what happens is, and this is just in the average bear market. I'm not saying that this will happen, but you know, it's like this. It's like if you had a monopoly board and you owned every single property on the monopoly board. You owned all the houses, all the hotels, every single property, and you're asking somebody like, hey, do you think I'm going to collect rent the next time somebody goes around the board? Yes, the expectation should be that somebody lands on one of your properties or many of your properties and you collect rent from that person. It doesn't mean with 100% certainty that whoever's rolling around the board won't land on a couple of free spaces and get off without paying you rent. Do you know what I mean? So in other words, it's always you always have to talk about things, especially in the market, in probabilistic terms. Like, you can say, hey, I don't know what's going to happen, and nobody knows what's going to happen. You can be 100% right in saying that, combined with, here's what I think will happen, here's what the probabilities say, you know, here's what should happen. And basically the idea is that I think over time, if you string enough probable events together and you're right about those, you know, that's one really, really good way to compound positively in the markets. And so it's not about being right all the time, because nobody can do that. Again, somebody could roll around a monopoly board and never hit on a property where they have to pay rent. But the question is what's likely to happen, and what's likely to happen the more times they go around and around that board. And so the question is, you know, what are the probabilities, say, A, and then B, like, what happens if you're wrong? So you want to avoid the risk of ruin. Like, you want to avoid the ultimate adverse outcome that happens when you're wrong. So like losing all your money, you know, losing the ability to play. So as long as you manage what happens when you're incorrect, and you sort of gear and orient yourself, not to say, hey, I'm in a must-win situation because I'm so confident that I know what's going to happen that if anything else happens, you know, I'm screwed. But you want to play for what's probably going to happen. And so anyway, this is all a big wind-up. To answer the question about what I think is going to happen in Q2. So let's just leave Tesla out of it for a minute, because Tesla literally is its own animal. I've said that in a bunch of videos. It doesn't necessarily trade with the broader market because too many things are going on with Tesla that, you know, they're just non-beta, meaning not connected to the movement of the market. Tesla's its own animal. And I want to pull this up and read it. But typically what markets do is they sell off initially when people get scared. After the initial sell-off, which kind of comes to a crescendo, like a crescendoed panic, where you basically have panic selling when people start to think about the future. You then get to a point where people start to say, okay, we've sold off a lot. I can now buy stocks, or I can now buy whatever it is a lot more cheaply than I could a few months ago. And let me see if I can buy this. It's on sale. I want to make some money. So they buy back into stocks, expecting to make money based on buying more cheaply. And what that leads to is a recovery in the stock market. It leads to an increase in prices. And that's sort of the first wave. And then as economic reality starts to set in, and people's hopes or expectations for how much they could potentially make on the way back up, they start to either flatten out or diminish a little bit. You basically get a second wave of selling and a new low. And so even before we had this bounce, on the way down, I had sent out this tweet that was published in a book that I've made reference to on this channel a couple of different times. And this book was written in like the 50s or 60s, and it describes over and over and over the psychological patterns that take hold in bear markets, which lead to certain types of not predictable, but probable patterns in the markets. And so far, this market is sort of playing out exactly like that. You basically have an initial panic sell. People start to look at the market and decide, well, it's cheap, and they pile back in. And right now, we're at the phase where I think people are trying to decide, like, are things okay? Are we recovering and going back to new highs? Or did we recover a little bit too quickly, too soon, too fast? So somebody's asking, does stock go up in the call or something? Last time it did. Sorry, Bob. I'll try to answer as many of those questions as I can. United Airlines is doing better than Tesla today. And Dean is saying that the stock price may change during the call. Depends on if Elon decides to. Yeah, right. Somebody's asking, where can we watch the conference call? Will you be streaming it? Will you cover it? Yeah, I will. I will broadcast the conference call on this channel. It's not coming up till 6:30. So last time we did it, we just had the conference call on, and I'll do that again, assuming you guys can hear it. But I will put it on this channel. And if you don't want to listen to this channel, you can just go to Google and just Google Tesla Investor Relations. And you can register. You can register for the conference call there and listen to it. So Matt is asking, is it worth buying Tesla tomorrow, and asking for opinions? I think it depends on what your time horizon is. I think to a lot of people, Tesla, even at 800, is cheap compared to what it could do in the future. But we're also in pretty uncertain times. So somebody else said it earlier than I did, but the stock's going to be volatile, which may give you different opportunities to enter the stock. But again, depending on your time horizon. And yeah, it's crazy. We talked about this on some earlier podcasts or some earlier live streams, but it really seems like Tesla has been preparing for something like this before any of us even knew what this pandemic was or would be, because they essentially had or have contactless delivery, in the sense that they'll drop a car off at your house or at your office, and they'll come and do on-site maintenance. And they do have bioweapon defense mode. What they have, basically a HEPA air filter, which is rated to be used in hospital operating rooms on their newer cars. And so you can activate, basically an air filter when you're in your Tesla car that will, I think, prevent like 99% of air particles from entering the vehicle. Hey, Blue, how's it going? Good to see you. And Dan is saying that although the first crash in March was large, I do think that the rebound is too early, considering most of the economy is shut with record unemployment and no one knows the end date. This is the really tough thing. And quite honestly, just to anybody listening right now, I know there are a bunch of you here. It's been a real struggle to try to think of content that, skates the line in between There are so many people hurting right now, and the economy's just been thrown for a complete loop. And it just seems a little bit disingenuous to talk about, the stock market right now and talk about all the things that are trading back and forth when there are so many larger humanitarian issues going on in the world right now. But I also think, that one day we do have to get back to normal, and typically recessions and economic collapses, and even if you've read about like Mozart or the Renaissance period or anything like that, that pandemics or other economic catastrophes have led to a huge amount of innovation and just like a burgeoning in different areas, whether it's, art or new companies, new ideas, new inventions. And so I'm kind of coming to the idea that we just need to, keep some sense of normalcy. And so some name suggestions: greater minds staying ahead right almost every time. Probable conclusions. Okay, thank you for all the name suggestions. I'll read all of them, each and every one. Really appreciate it. And somebody's asking, for those looking to start buying Tesla for long term, do you suggest waiting a bit or to slowly pick up some now and through till Q2 reports? Yeah, I mean, that's the ultimate question. I have done a ton of videos, and some of them have included some trades and some things that I've done on Tesla. The one thing that I always say, and I know that it disappoints people, and I also know that you get this information on other channels, which probably helps them on a relative basis relative to this one, because I don't usually talk about it, but I almost never or do not do trading recommendations. And the reason is just, if you lost money on something, I'd just feel horrible. So I tell you what I personally do sometimes, and I'll just tell you right now that I have less Tesla shares than I have had in the past. Clearly, the right move would have been to double, triple, or quadruple down at the lows at 360. I didn't do that. So, I'm smaller than I have been in the past in Tesla. I do think that there's a good chance that we do have some type of second dip. But I also think that Tesla kind of tends to defy the market. So if you have money that you can afford, I don't want to say lose, but if you don't mind seeing it draw down, like Tesla could easily go back to 400. It could also easily go to 1200. And the reason for that is, who do you know right now that's talking about the market that is extremely bullish? Somebody was telling me, I was on the phone with a friend, and they were telling me that Goldman Sachs was sending out the results of a survey that they did with their institutional clients, and that for I think the first time ever, 100% of everybody who responded to their survey asking, are you bullish or bearish on the market? And this was like 2 weeks ago. 100% of the people that responded to the survey, big institutions, people with billions and billions of dollars, were all negative. So when there's nobody left to sell, and when everybody's negative, it usually means that the price goes up. So the point is the fact that I'm expecting a dip, or think a dip could happen, and that's what has happened in history, and it seems like everybody else is waiting on the sidelines, tells you that, if you can afford to see a drop in your portfolio in Tesla stock, because it could happen, and it's just a trading mark. If you can afford to do that, then yeah, it's probably makes sense at any time to purchase a little bit, because in my personal opinion, and the global thing that we're going through right now may push the timeline out a little bit, but I think Tesla can be a lot higher than $800 a share. And that's based on math. It's based on how many vehicles they could sell, the price for those vehicles, the margin that they'll earn on the vehicles, and the resulting earnings. And, ARK Invest has price targets for Tesla, which are like in the thousands of dollars. And I don't think that all of their assumptions are unreasonable. Yeah, and Dean says Tesla is one of the most fun stocks to follow, even though not holding that much. I agree. The story is awesome. And, I made a video on this, but just never bet against Elon. Talking about 2008, he basically divided up half of the money, or he divided up all of the money in two from the proceeds that he earned by selling PayPal, and put half of it into SpaceX and half of it into Tesla, because both companies were going to die in the last recession of 2008 if he didn't put his own personal money into those companies. And so talk about risk reward. The point is that, he easily could have taken a couple $100 million after having sold PayPal and done really, really well, or gone to a beach and done something else. And instead, he's driven by this mission of reducing our carbon footprint and finding alternative energy sources on Earth, and then also making a pilgrimage to colonize Mars. So two pretty ambitious goals, but he's putting his money where his mouth is, and how can you bet against somebody like that? And somebody asked, hey, just joined, did the numbers come out? Yes, they did. I'll just give a quick recap. I know that some of you have already listened for it. So let me just go back. And so just a little bit of history on this whole thing. So we did a live stream last quarter, and on the same day of the quarter, so the day that they had their earnings announcement and conference call. And the first thing that we did was we skipped down to the Outlook section, and you're seeing that here. The Outlook section is from last quarter, where they said that their vehicle deliveries would comfortably exceed 500,000 units due to the ramp of the Model 3 in Shanghai and the Model Y in Fremont. So that was their guidance last quarter. And should I put myself on the spot and do some quick math? I think 500,000 units times... I think 500,000 units at a 50,000 ASP is $25 billion of revenue. So if you wanted to do the rough and tough math from home, you could just look at 500,000 units, 50,000 ASP. The ASP is lower than that, but they also have solar and other businesses, and just come to a $25 billion revenue number. And anyway, the estimates for revenue this year are around $27 billion. So you kind of do the auto that we just calculated, add in a little solar and energy, and you get to the current estimate. But anyway, we looked at that. And to answer the question, yes, the Q1 2020 earnings were released. They came out just after 4 o'clock Eastern time, and they did give us an update. And so the update was interesting. And before I do that, let's just look at where the stock is trading after hours. Wow. So it's up to the highs since we've gone live, and it's up 10% after hours, up $82. The stock right now after hours, and we haven't had the conference call yet, which will come up in about an hour and 15 minutes, is at $883.90. So the highest it's been essentially the day of any one earnings release. Like the day that they released Q4 back in January of this year, the stock traded up after hours, I think, to around 600 something. And now we're sitting over $880 a share 1 quarter later. And that's all after hours. The stock closed officially today in the market at 800. And we have yet to hear from Elon yet. We don't know what he's going to say. But now I've stalled enough, so I'm just going to go to what we covered as far as the outlook for this quarter, Q1 2020. And so I just told you that in the last release, they had given you guidance, which said that they would produce 500,000 vehicles. And in the introduction to their outlook this quarter, they said it is difficult to predict how quickly vehicle manufacturing and its global supply chain will return to prior levels. Due to the wide range of potential outcomes, near-term guidance of net income and free cash flow would likely be inaccurate, and we will again revisit our 2020 guidance in our Q2 update. So they're effectively suspending guidance is what this means. Now, they do make a note and they do say, we have the capacity installed to exceed 500,000 vehicle deliveries this year, despite announced production interruptions. And for the U.S. factories, it remains uncertain how quickly we and our suppliers will be able to ramp production after resuming operations. And they go on to basically, their cash flow and profit guidance is suspended for the time being. There are a couple really interesting things for people that are asking, like, okay, so Mr. YouTube channel, you're telling me that the stock is up, but you're also telling me that they suspended the guidance. That can't be good. Why is the stock up? So let me give you some potential reasons for why the stock is up. One is more theoretical than anything, but I think just people are negative, period, right now. And so anything that doesn't point to the world completely ending is probably good for any stock. So just on the pure basis of, I'm sure Tesla Q, thought Tesla would completely implode this quarter. The fact that they didn't implode means that maybe there's a silver lining there. But just in terms of hard facts and actual numbers and commentary, here were 2 or 3 really, really surprising things to me specifically. So number one, this is a surprise. They said that they expect that production of Model Y in Fremont and Model 3 in Shanghai will continue to ramp gradually through Q2. So I don't know how they're doing that exactly, but they're saying that their production is going to increase in Q2, the quarter that we're in right now. We're about halfway through it. A little less than halfway through it. We're a month into 3 months, that they gradually expect it to ramp. So how they're increasing production, I don't know, but I'm assuming people thought that production would be flat or maybe even down with everything that's going on. So that's growing. I think that's good. They also said they're continuing to build capacity for Model Y at Gigafactory Berlin, which is Gigafactory 4, and Gigafactory Shanghai, and they remain on track to start deliveries from both locations for Model Y in 2021. So I think that's no change. So no change might be a positive since it's not a negative. And then lastly, they talked about shifting their first Tesla semi-truck deliveries to 2021. I don't think there were a lot baked into expectations for those Tesla semi-trucks, so I don't think that's a huge negative. So anyway, point one is just the fact that they're continuing to increase production in this quarter. I think that's got to be a positive. Here's something a little bit more quantitative. So their margins in Q1 of 2020 were extremely strong. 15.9% EBITDA margins, basically profit for the whole company overall. 15.9% EBITDA margins in Q1 of 2020 versus 3.4% for the same quarter last year. So the margins went up from 3.4 to 16. So a 13% increase in margins, which they increased by 13%. 13% is bigger, I believe, than GM and Ford's whole margin total. So they had a really, really good performance there from a profit standpoint. And that's one thing that critics of Elon and the company have always pointed to is, hey, your margins aren't good. Well, their margins were really good in this quarter. So that's point two. And then point three, let me just see if I can pull up Twitter. So I think this one is not very meaningful, to be totally honest with you, but they did beat the earnings EPS estimate for the quarter. And I'm just scrolling through Twitter, trying to find where that actual number is. Again, I don't think a quarterly EPS number for a business whose value is primarily attributed to things that they'll do in the future. I don't think this quarter should have an outsized effect or impact on the value of the company. But nonetheless, they did beat from an EPS standpoint. They did beat on Q1, and that may be a positive. So let me just try to see if I can find the actual number. I can't find it, but it doesn't. The point is that, let's see, their GAAP EPS. I don't want to waste too much time because I want to get to more important things that you actually care about and that I actually care about. Let me just try one more place. But the point is they beat EPS, and EPS was positive, and I think earnings were forecast to be negative. Yeah, in fact, you can see it right here. So according to Yahoo, the average estimate for EPS was a loss of 36 cents per share. Excuse me. And the report, let me just see if I can find it. The report was $1.24. The report was $1.24. So basically a loss of 30 cents was expected. $1.24 is what they put up. Could have been for lots of reasons, including, I'm even just looking, if you take a look at the amount of revenue that they got from regulatory credits, they definitely jammed regulatory credits into the Q1 earnings. So for example, and the regulatory credits are basically rebates or tax credits that they earn for selling electric vehicles that the ICE, that the internal combustion engine vehicle manufacturers don't get. So it's not really recurring income that they receive from customers. It's more of like a government grant or benefit that they get for producing environmentally friendly vehicles. But in any event, they recognize that income as revenue. And, this is just sort of interesting to kind of normalize the earnings a little bit for you. So last year in Q1, they received $200 million of regulatory revenue credits. This year they received $354, so roughly $150 million increase. And if you just look at their net income, it was $227, so $227 million. So if you take that number off and you get to positive $150 million, positive $50 million, then earnings are a little bit closer to flat than they would be without this recognition. But to tack on to that, they need to string, I'm told, in order to be considered for inclusion into the S&P 500, which people view as a positive, they need to string together four positive quarters in a row. And I don't think they've ever been profitable in the first quarter of any year. And so this is the first year that they had a first quarter which was profitable, and that means that they've now strung 3 out of the 4 required quarters together in order to get that 4-quarter string of positive earnings, which means they can potentially, from what I'm told, be included into the S&P 500, which people think is positive. So that's probably point B to the 3 reasons why. And somebody's asking, are we live now? Yes, this is live. And thank you for tuning in. Somebody, I think, again, asked, when is the earnings call? It's coming up in about an hour. It should be at 6:30 Eastern. And I'm just going to go through some of the comments. ARK is not to be trusted. They don't deploy where their mouth is. Trading Tesla back and forth. That's what somebody said. So I believe ARK sold some Tesla in the $800 to $900 range a few months ago, and I believe they topped back up when the stock fell. So ARK has always been transparent about the fact that they trade Tesla shares, and they have both been buying and selling in the first and second quarters. Somebody's saying Tesla just has one factory online for a month, expected drop. Somebody asked what document I'm referring to. Where do you get it? Just Google Tesla Investor Relations, and it's in the section. It's in the events and presentations section, which I'm showing now. They have an upcoming events section where you can see their Q1 2020 update. Somebody says, I think Tesla will do to the industry what Apple did to the phone market. Don't disagree with that. And somebody says this or next quarter, they will be in the 500 to 600 range to buy again. So many good options to invest in currently. that's not overpriced. Yeah, it's tough. I mean, the market, could definitely see a downswing based on what we talked about earlier. Basically, you usually, or in a lot of cases, see an initial dip, a follow-up rally, and then when prices in the follow-up rally don't make new highs, people will sell off again, and you get a retest or lower lows. And despite all the great things that Tesla's doing, they are still a company operating in the stock market, and stocks can trade together sometimes. And so, Tesla may not be immune to any type of correction. Can you talk like Elon? That wouldn't be very wise, would it? Actually, I do have a decent Elon impression. 880, wow, looking to hit all-time high. Let's see where, I'm just going to give you an update on the trading. Wow. This is insane. Well, I guess it's dipped a little bit, but, after hours, it's up 9% at $872, almost $873 per share. I mean, this was unthinkable last quarter. I can remember how euphoric people felt last quarter that the stock was up 10 to 15% after hours on their previous report, with the stock around, 600-700. And so here we are at almost 900. And defying the laws of gravity. I know people get mad when I say it defies the laws of physics, so maybe I won't say that anymore. But somebody said, I hate myself for not buying at the 330 mark. Yep. I'll add myself to that list. Somebody asked, why is it blurry? I'm not sure. Do you mean the screen? And also, is there an echo on the microphone? How's the sound quality? Is it okay? If somebody could let me know how it sounds, that's important, because the number one comment I always get from people has to do with not liking the sound or the sound not being perfect. So believe it or not, because I hope it sounds good, but I invested a lot in getting like the best sound system almost that you can get. And so anyway, hopefully it's good. But just let me know. Somebody says dollar cost averaging versus... Okay, appreciate that. Thank you for the feedback on the sound. Sounds like it's good. Dollar cost averaging versus sell and adding shares on dips. I'm up over 300%. Long-term hold doesn't seem as profitable with this stock high and low. Yeah, I mean, Justin, you can refer to like ARK. They are behind Elon 100% and support him 100%. But they also do talk about how the market gives you opportunities to buy and sell at certain levels due to the volatility of the stock that you may not get in situations where the company isn't public. And so, yeah, I mean, ARK uses the volatility of the stock to like load back up at various lows and maybe trim or cut their position a little bit when things get high. Yeah, so somebody's asking about the number of shares. Let me actually look. That's one thing that I didn't check. So I'm just going to check and see how many diluted. Obviously, the more diluted shares that the company has outstanding, the less earnings we all have as shareholders. So it's something good to monitor, just the number of shares that the company has outstanding. Let me see if I can check that for you guys real quick. Oh, and for the people that just joined, we also took a look at the capacity of their different factories in Fremont, California, in China. And basically the answer was that the Fremont capacity stayed the same. 90,000 for models S and X, 90,000 annual vehicle production capacity, and 400,000 for models 3 and Y in Fremont. And then in Shanghai, the production capacity went up from 150,000 vehicles last quarter to 200,000 vehicles this quarter. So anyway, I'm just looking for the diluted share count. Let me see if I can search for it. Yeah, so we're at 100. We're at 199, up from 187. So we increased by 12 million shares. So that's actually that's like a 5% increase, more than that. So I don't know. That may be partly related to Elon shares. I think he has 20 million shares that are in reserve as part of his executive compensation. So just doing some quick math, by the way, if the shares were at 1,000 and he owned 20 million shares, that would be $20 billion. Like if Elon got an additional 20 million shares and the option price was struck at zero, and he owned them at 1,000, that's an additional $20 billion of net worth. So that's a big number. But anyway, the share count did actually creep up. So something to look into. And thank you, Rob. You found it before I did. Somebody's talking about Tesla services and insurance for the long game. And Brian bought at 223 in May 2019. Great call and great buy. And one thing that was so fascinating, just going over a little bit of the history of this channel, one of the things that really got me so interested in Elon's story versus what was playing out in the markets is, I don't know if you guys have read Ashley Vance's book on Elon Musk, but it goes through a lot of his history and entrepreneurial and personal history. And actually, he also tried to become a trader. Did you guys know that? He interned at a bank in Canada and tried to be a financial guy, but he like didn't get the job, or the internship didn't work out. So I don't know if you knew that, but thank God he didn't become a bond trader. And anyway, there's so many interesting things in the Elon story. And one of the things that I got really interested in was watching the webcast from April 2019, so a year ago, watching the webcast of Tesla at Autonomy Day and seeing the market reaction, the negative market reaction to Tesla's Autonomy Day presentation, and just not understanding why people weren't grasping the idea of the robotaxi opportunity and how massive it could potentially be. My very first video that I ever put out on this channel goes through the math, and I did a follow-up video on it too, goes through the math of why the robotaxi opportunity for Tesla is one of the biggest, most value-creative opportunities for the company. And there's a good follow-up one on it too, which talks about Tesla going to $800 a share. But basically, Elon said that when the Model 3s and all the various Teslas that are on the road right now, about 1 million vehicles, which have the full self-driving capability, when those cars get switched on and become fully autonomous, it will be one of the biggest asset value creation stories in history. And his point is that, well, if any of our cars could become its own robotaxi and basically charge people $1 a mile versus the $2 to $3 that Uber charges people, then taxi costs would go down by 2/3, and all of the income that the car gets from charging passengers is essentially profit. And so you basically have a car that can generate income for you, and they're going to have tons of these. And so the media started saying, well, hey, they were laughing, haha, Elon says there's going to be 1 million robo-taxis on the road by 2020. What's he talking about? This makes no sense. You can't trust the guy. And I was thinking to myself, well, hang on a minute. He didn't say that there are going to be 1 million robo-taxis on the road in 2020. What he said is that the cars that Tesla ships out of the factory have the ability to take over-the-air updates. And over time, the software to operate those cars is going to improve. And they already have the hardware in terms of the equipment required to be a self-driving vehicle, but they don't have the firmware updates yet. And so we expect, and it's a forward-looking statement, but we expect that Teslas that are on the road in 2020 will eventually get an over-the-air update, which will allow them to operate autonomously. And that's what he meant by there will be 1 million robo-taxis on the road. And so, I just thought that's a huge amount of disinformation. And when I really looked into the value creation potential and what it would mean for the stock if Tesla were able to get 1 million robo-taxis on the road, that's when I really, really flipped into both believing the company, understanding the value proposition, and understanding understanding how big the opportunity could be. And somebody's saying, wow, how could someone buy Tesla at this price? Insane, so overvalued. Yeah, it could definitely, the stock could absolutely trade anywhere. Somebody asked what I think about NIO. I don't look at it, but I do think it's potentially a stock that's manipulated, so I don't really know. And somebody's saying, will NIO be the next Tesla? I really don't know. To somebody that follows it more closely, let me know what you think. And somebody's saying, yes, that's true, but the hardware iterations have been heavy as well since the cars hit the market. Yeah, that's also true. And I did buy, for the people that are new, I test drove a Model X in New York back when the world was a little bit more normal. They have a gallery, a dealership in the meatpacking district, and I went there and I test drove Model X, a new one, the fast one. And if you've ever been to New York, we have a pretty crazy road on the western side of the island of Manhattan called the West Side Highway. And the traffic lanes aren't really well marked, and there's a lot of traffic lights, but despite all that, people drive really, really quickly on the road. And it's just kind of a crazy place to drive. And in any event, I activated autopilot on the road, and as far as I could tell, the car did perfectly. It was a really crazy experience to feel what autopilot felt like, and just to see it. It would pick up traffic cones. If you drove by a construction crew that was doing work on the road, the car would render the traffic cones and show them on the screen. If you drove by a box truck, it would render the box truck. If you drove by a convertible or a sports car, it would render a smaller car next to you or behind you, in front of you, wherever. And it makes you trust the system a little bit more, the autopilot system, because you can see that it is aware of its surroundings. I shouldn't say aware, but it's able to sense the presence of objects and interpret the objects and render the objects in a three-dimensional way, and it's pretty amazing to watch. And people talk about, levels 1 through 5 of autonomy, and Elon basically has 3 categories, and I really like this way of thinking about the world. A perfect opportunity to illustrate why he thinks about autonomy in 3 levels came up during this test drive I was on that I was just discussing. So level 1, and actually, let me should I put up a better video than this? Maybe I'll actually try to put up something entertaining. Go to YouTube. This is a new account here, so that won't show. People are live. Elon Musk live, Bitcoin. Wow, there's a lot of Elon live streams right now. Interesting. Q1 earnings live. Cool. Well, thank you guys. Wow, we're getting a really good number of views relative to what else is out there. So I really, really appreciate that. But anyway, let me just give you some entertaining video to look at. Tesla Autonomy Day. They have some nice B-roll footage. So I'll play that. You guys have probably all seen it before, unfortunately. Oh, and somebody says, I just bought the Ashley Vance book. I can't wait. Yeah, I highly recommend that you get it. It's a really, really good biography. There's some extremely interesting stuff. And also, if you want to know other people's opinions, so his co-founder of PayPal, Peter Thiel, has also said a bunch of things about Elon. They're worth looking up. I did a video about that. Somebody says the stock market is crazy, man. Yes, 100% agreed. And our triplet says, yeah, almost 300 views. But actually, if I look at my analytics, we've had 2,000 playbacks. So 2,000 different people have come in. Actually, over 2,000 have come in at various times throughout the stream. So that is really, really cool. And thank you guys so much for watching. And that's really awesome. I appreciate it. Anyway, I had a story I was going to tell about the autonomy thing. So Elon talks about breaking down the levels of autonomy into 3 categories. And the first category is basically the car can do can perform most functions, but it needs human intervention. And here was a perfect example. It happened to me on the test drive. So if you're in an autonomous vehicle and you're on a 1-lane road, so like a 1-lane road going one way, and then there's a double yellow line, and then there's traffic on the other side of the road going in the opposite direction. So you're in an autonomous vehicle. You come up to a delivery truck that's in front of you, and the delivery truck is pulled over, and they're making a delivery to whatever the store or business or home is in front of you, and they're going to be there for 5 minutes. A normal person kind of pulls into the road, and they look to see if anybody's coming the other direction, and if there's nobody coming, they cross the double yellow line, they pass the truck, and then they resume the normal drive. That's what anybody would do. I don't think you'd be stopped by a police officer for doing that. I don't think you'd be honked at. That's just how things work. However, how do you program an autonomous vehicle to make a quote unquote illegal move like that? It's basically making a decision where they do something that is considered to be illegal, technically, probably. So there are questions like that, questions of like, when do you have a human intervene? Wow, somebody just, I'm going to get to this in a minute, but somebody just, it looks like donated $9.99. Thank you so much to Justin. That's crazy. That's the first time that has ever happened. And I really appreciate it. That's insane. I'll do something really good with that money. I will potentially donate it to, maybe to COVID or to maybe Team Trees. I'll talk a little bit about that in a second. But thank you so much for the donation. That's wild. I appreciate it. Thank you, man. In any event, so how do you program a car to make a decision which goes counter to a law? And so Elon's point is the car functionally can perform everything it needs to do in order to be autonomous, but like there are legal, ethical questions that arise as you're driving a car. So that's level 1, is the car can perform, but it needs some human intervention. Level 2 for Elon, as far as what he's described, is the car does everything without any human intervention. And if you watch the Super Bowl in America this year, there were people on I believe it was the 49, no, it was the Cardinals. I forget which team, but anyway, there were players on one of the teams that were saying, yeah, the car drives me to practice. Like the car drives me to the stadium. My Tesla it's really cool. It was like the talk of the Super Bowl. So anyway, level 2 autonomy means that the car does 100% of everything and makes all the decisions without any human intervention, and it's autonomous, period, full stop. Level 3 is when the regulators agree with Tesla's assessment of level 2. So in other words, there's no technical change in between the autonomy from level 2 to level 3, but the regulators then come to accept, yes, this car can operate autonomously. And so there's really only 2 levels to autonomy. And I don't know, but to anybody that's ever ridden in autopilot or driven in it, it feels really close. It was the 49ers. Thank you for that. And somebody says, I'm new at the market, 3 days in, and I made the mistake not getting into Tesla. Do you think the stocks will only go up from here and not drop back down? No, stocks will be volatile. And Hendricks says, exactly, there's so many situations in traffic that a computer just can't decide yet and won't anytime soon. So your self-driving Tesla is far away. Do you have any good suggestions for a beginner such as myself? Yeah. So this was an early video for me, but I do have some early videos on how to invest in the stock market. I will just tell you right now, I probably shouldn't even have it out here because it's not my best work anymore, but they were videos that I made early on, and the information in them is still good. They're just not the best produced videos, but you can check those out. I would check out the video on Stan Druckenmiller, and it said the video title was like how this Tesla bear avoided shorting Tesla, and it basically goes through the story of a guy who is a billionaire, and somebody came into his office and said, "Hey, you should short sell Tesla. I think Tesla's going to go down, and here's why." And this guy, Stan Druckenmiller, talks about how it was one of the best presentations he had ever seen. It made sense. It was clear, it was concise, well-researched, good points. And after the guy finished making the presentation in his office, which was really impressive, he said, "By the way, have you driven a Tesla?" And Stan, who again is a billionaire, for his 60th birthday had bought himself as a gift a Tesla, and he loved it. So he asked the guy, "Hey, have you driven a Tesla? What do you think?" And the guy says, "No, I've never driven a Tesla." And Stan decided to redeem his money from that guy basically the very next day, because his thinking was, you could have all the numbers correct, but if you haven't had the feeling of driving the car, if you don't understand the product, and you don't understand how much people are in love with it and how important it is, and how innovative it is, then you can't credibly trade the stock. So I just thought that was interesting. But yeah, for beginners, there are lots of good books. If you're more interested in the trading side of things and the market activity and action side of things, as well as the personal histories and stories of some of the biggest and most successful managers, I would recommend any of the Market Wizard books, which are really, really excellent and fun reading. I would recommend any of those. For investment books, Rich Dad, Poor Dad is a classic. Richest Man in Babylon is a classic. For stock selection and investing, I would recommend Margin of Safety, the Seth Klarman book. I would recommend any of the Berkshire Hathaway memos, their annual letters, especially the early ones from like the 50s and the 60s, because they talk a little bit more about the specifics. But if you're just trying to get, I would look up, for anybody who I haven't read it in a while, but for anybody who's interested in how did Warren Buffett really turn himself into a great investor, look at any interviews with him on YouTube. But I would also look up his Geico investment. It's from like the 40s or the 50s, maybe, possibly the 60s, but I think it's from like the 50s. Look at his write-up. It's like a one-page write-up on Geico, why he invested in Geico. I think to anybody who hasn't read it, it'll make you a much better investor. And Justin says, just looking to hear if seeking to gain shares is better than simply holding my 20 shares for the future. Serious. Is the question, should you hold or sell your 20 shares? I'll wait to see if that's the question. And yeah, somebody says there's so many variables for every investor. 100% true. That's why I actually think things like the Market Wizards books are really great, because it shows you that no one style or approach has worked consistently over time in every market. Like, if everybody could just buy a cheap stock and hold it forever, and that was the number one way to make the most money in the market, then everybody would do that, and then the stock wouldn't be cheap anymore. You know what I mean? So, and you can come up with countless examples of that. So to me, from my personal research, and it's not like I'm the number one expert, we all have different opinions on this stuff, but I've noticed that the people who have done the best over time have stayed really open-minded and flexible in terms of their approach, but that they have adapted their thinking and their style, over time, depending on conditions and the market and things like that. Okay, check out the highlight comment above. Okay, so if I just sell half my shares, I'm playing with house money and still up significantly. Bought 20 shares at 192. This is somebody, Justin, asking about Tesla stock. Bought 20 shares at 192 and held through the $900 run. Insane. Now after that dip, taking profit to buying back to gain shares. And held through the $900 run. I think you're asking, should you take some profit? I mean, there's nothing wrong with taking profit. There's nothing wrong with taking profit. And to your point, I mean, let's just say, I'm not saying this will happen, but hypothetically, Tesla's at 900, it goes down to 450. You can buy twice as many shares at 450 than you can at 900. So if that's your question, yes. But we don't know what's going to happen. So like, is it reasonable to take a profit having bought there? Yeah, it's always reasonable to take a profit. Somebody's at Samir. Hey, Samir, how's it going? Asking, is Tesla a good entry now or wait? I think there's a chance the market could reverse a little bit. So, I certainly wouldn't pile in everything to Tesla right now. Me personally, I'll just tell you what I'm personally doing. I own a little bit of Tesla. It's less than I've owned in the past, and I am waiting personally. I'm waiting personally. But we'll see what happens in the market, and we'll see what Tesla says on the call. And I just want to caution everybody about one thing. When they're thinking about the economy and the trajectory of the economy overall and what the impact of all that stuff will be on the stock market, think about things in these terms. So if you have a stock, let's say they're doing $1 of earnings and they're trading at 10 times earnings, right? Like stocks trade with PE multiples, price to earning multiples. They're earning $1. They're trading at 10 times PE. So the stock is $10 per share, right? 1 times 10 at $10 per share. If you have a global pandemic in one of those years and $1 of earnings goes away, then the stock should go to 9, right? Like if the sum total of the stock is based on the next 10 years of earnings and that's it, and it's trading at 10 times and you take 1 year of earnings away, the stock should go down 10% to 9. But for a lot of companies, the more of the value that's based in the future, the less the current year will impact negatively that company, right? So like for Tesla, their earnings are on a huge ramp, right? Like they're earning nothing compared to how much they're going to earn in the future based on a lot of people's expectations. And that's because they're only producing and selling 500,000 vehicles. That's 0.5% of the global vehicle market. The global vehicle market's like 90 to 100 million. Tesla's doing 500,000, so they're only 0.5%. And companies like GM and Ford are at 6 to 8 million. So Tesla has a lot of room to increase their earnings if they're able to do it profitably at a good margin with a more normal vehicle sales number. And so for that reason, the money that they're earning today in this environment is not as impactful, in my opinion, to the ultimate value of the company as whatever they will do going forward when they do sell a lot of vehicles. The point being is somebody who says, 2020 is going to be terrible because the economy is going to contract and, nobody's going to buy a Tesla. And, think about it this way. If Tesla's sales go down 10%, that's 50,000 vehicles. Right? If GM's sales go down 10%, that's 800,000 vehicles, right? 10% on 8 million is 800,000. So for GM to contract by 10%, that's 150% more, like 800,000 versus the 500,000 vehicles that Tesla sells. Is this all making sense? I'll explain it again if it's unclear. But the point is that Tesla's making 500K right now. A decline of 10% for GM would be 800K. So the entirety of Tesla's production would be completely wiped out if they were on par with GM. And so the relative negative impact to Tesla in these early years of their production upswing is a lot less than it is for a mature company, in my opinion. And that's one of the reasons why you could look at the stock market now, be like, hey, it's going to decline. The economy is going to get bad. But it's one of the reasons why Tesla as a stock could hang in there for that reason. So that would be the one counter reason to kind of look at things and say, well, I think the economy is really bad, but I also think it's possible that Tesla goes up. And that applies for like any tech stock, or any stock with big growth in the future. Let me just do a quick check on, but anyway, for anybody who's curious about how markets typically trade, and like, let's just not forget that Tesla is a stock. It does trade in the market. Like stocks can trade anywhere. It doesn't mean that that's the value of the company, but stocks can trade anywhere. For anybody who's curious about the cycle of bear markets and how they've played out in the past, you could ask me about it in the chat or just look at the Twitter IFTF6, the number 6, and I posted a little excerpt from a book that I've done a video on, which basically describes the cycles of the bear market. Basically what it says is you get an initial panic phase sell-off, which we already had in March. Then you get an increase in prices, which we're having right now. And then you get a subsequent dip after that. So we haven't reached that point yet, obviously, but we could. And so for people who want to take advantage of lower prices, they might, want to wait for that, but we obviously don't know if it 100% is going to happen or not. And I'm just going to check on where Tesla is at 867. So up about 8%, come a little bit off the highs, but it's just crazy. Up 4% today in regular hours trading, and it's up 8.5% after hours. And to the people listening, Tesla and Elon gets on these calls. So Elon will be joining this live stream in half an hour because I will broadcast the conference call, the Q1 2020 conference call, directly from Tesla onto this stream, and then Elon will probably be on that call. So Elon will be joining the stream in probably 35 minutes. And let's see what people on Twitter are saying. See if people have what can I do? Twitter.com. Used to be able to do that. Wait. There we go. Let's see what people are saying about Tesla stock. Yeah, I did see that some people were talking about the CEO insuring the board of Tesla for negligence. Maybe I'll just read it out of curiosity. By the way, for the people who are new to this channel or are not familiar with it, one of the things I did earlier this year was I live streamed reading the entire Tesla 10K. It took like 15 hours. So I did it in 2 parts, but I basically didn't sleep, stayed up 2 nights all night, 2 nights in a row all night, and read every single word of the Tesla 10K. So that was pretty insane. But in any event, I read the entire thing. I'm not sure anybody else on the planet has done that, has read, and I'm talking about from cover to cover, from the very first word to the very last signature. Read the whole thing on this channel. It's still posted. So anyway, somebody is saying that this was posted somewhere. It's just I'm not even sure if I want to bring this up because I don't know where it's written. But did Tesla determine not to renew its directors and officers' liability insurance due to disproportionately high premiums quoted by insurance companies? Instead, Elon Musk agreed to personally provide coverage substantially equivalent to such a policy for a 1-year period, and the other members of the board are third-party beneficiaries thereof. I don't know. This seems fishing to me. Basically, companies don't want to provide. Elon has had a crazy past, right? He had the thing with Joe Rogan. He had the SEC settlement. You have to be willing to take a little bit of that stuff for the benefit that you get from investing in him. If this were a private company, think about this. He wanted to, or was tweeting about taking Tesla private at $4.20 per share. That was $400 ago. And at the time, $4.20 per share was a premium to where the stock was trading at the time he sent out the tweet. So if if they had taken the company private at $4.20 per share, then nobody would be participating into the run up to 800 or 900 right now. So I just don't find any of his antics that crazy, particularly when you compare them to the things that he's been able to accomplish. Like, I'm just, willing to put up with some of that stuff in exchange for the benefit. And I truly think his heart is in the right place. I think he's trying to do a lot, and we all make mistakes, and he's no different in that regard than anyone else. He has his fair share, but he, on the other side, has a lot of productivity and a lot of good to make up for it. He randomly donated $1 million to Team Trees last year, which is the same. I actually did the live stream that I just referred to where I read the 10K. We also donated almost $300 to Team Trees for that live stream. And he's done a lot of good things. So anyway, people, I guess, are upset that he's paying for insurance. I'm not that upset by it. So Gene Munster, top 3 takeaways from Tesla's Q1 update ahead of the call. This quarter's negative free cash flow is due to the inventory rebuild. We actually didn't really cover that. Tesla will likely be added to the S&P 500 after selling credits to meet profitability. We did talk about that, and I do think that is one of the reasons potentially why the stock is up. And street estimates of 403,000 deliveries for 2020 are way too low. I would like to know how he reaches that opinion. I'm not sure. So Tesla delivered in the mid 80,000 in Q1. Their previous guidance said that they would comfortably exceed 500,000 units. That's what they said last quarter. In this quarter, if you're just tuning in or if you're new, they suspended their guidance. So they didn't say we're not going to hit 500 or above 500. They just said we're not going to update you again on those numbers until the second quarter. That's what they said. And somebody asks, do you think the cars will still sell around the current price with time moving forward? I think over time the ASPs will go down a little bit. But, here's just a quick exercise for anybody can do. What market share do you think, whoever the first person in the chat that has a reasonable answer for this, what reasonable market share do you think Tesla could achieve? Like out of all the vehicles on the road, and there's a lot, or there's BMW, Audi, Mercedes, Ford, GM, Lexus, Toyota. Tesla's its own company. What reasonable percentage of the global vehicle market could you foresee Tesla being as a percentage of vehicles on the road? Just somebody shout that out, and we'll do some math based on that number. And there's probably a little bit of a delay, so I'll wait for the number to come up. But somebody's talking about Tesla batteries. I did 2 videos on Tesla Battery Day, so you can check those out if you're interested. And somebody asked which argument, and somebody's asking, what do you mean in total of all autos? Just a percentage term. So if there were, 20%, 6 to 8%, 32%, okay, all good numbers. I don't disagree with any of those numbers. Let's kind of pick the midpoint that's just easy to do on the, somebody said 100%, 2%. Okay, so let's say it's 10%. I think based on what everybody said, and yeah, Creon says 10 to 12. Let's say it's 10%. Okay, that's 10 million cars. Okay, that's 10 million cars. So now I'm going to put myself under some pressure because I'm doing this math mentally. But 10 million cars at a 40,000 ASP is $40 billion, right? That's $40 billion a year. And I think the car companies trade at a multiple to the revenue. So if we just say the revenue is 40 billion, what multiple Okay. I'm just looking to try to see the comments, but okay, I want to go back to it. Let's call it 10, and somebody asked when, like over the next 5 years, let's say, even 5 to 10 years. If Apple buys them 20%. Okay. So let me go. I'm going to do this out. So I'm actually pretty confident I can do it, but in my head, but let's just do it on a calculator. Wow, this is a crazy like scientific calculator. So 10 million vehicles at a 40,000 ASP is $400 billion. Okay, so that's $400 billion. And they just put up a EBITDA margin of 15%. So I'm going to assume that they do EBITDA of 15%. Actually, I should have just done this in my head because 15% of $400 billion is going to be 60 billion, right? Times 0.15 is 60 billion. And then what EBITDA multiple do you think we should put on that? Like what earnings multiple? I mean, you could look at all different kinds of comps like Apple. I should even pull up Apple because I did this in an earlier video. Let's just say it's 10 times. That might be aggressive for a lot of people, but 5 times is pretty low. So let's pick the midpoint of that. Let's just say it's 60 billion times 7.5. So that's $450 billion. And they do have a little bit of net debt right now and a little bit of cash, or I should say a little bit of debt and a little bit of cash. Let's just assume both of those zero out, right? They have 200 million shares right now, but let's say they have like 250 million in the future. So divided by 250 million shares is $1,800 per share. So that's just a back of the envelope, not investment advice, but just a back of the envelope estimate for conservative multiple on potentially conservative margins at, a 40,000 ASP, 10 million vehicles. That doesn't include energy. It doesn't include solar. It doesn't include robo-taxi. And most people, myself included, think that ultimately one of the biggest, if not the biggest value creators for this company will be robo-taxi. And the reason is because the robo-taxi fleet can be so profitable charging $1 per mile, whereas Uber and Lyft charge like $2 to $3 per mile. And they're losing money doing that. So anyway, so we just got to 1,800 per share. That's what this chat came up with based on their own math. And somebody wants to do 5. Thomas wants to do 5. So we got to what, 60 billion, right? So a 5 multiple would be 300 billion, right? So 300 billion. And don't forget, I also did 250 million shares. If we actually took their share count today, so let's do 300 billion, which is a 5 multiple. 300, 5 multiple divided by 200 million shares outstanding today is a $1,500 share price. Thank you, Ryan. I really, really appreciate it, man. Thank you for joining. And we've actually had 3,000, because people are in and out, but the average watch time is 6.5 minutes, which is really good because the average YouTube video is probably under 10 minutes. And the ones that perform well are around 10 minutes. And the average watch time is around 50%, which means, the average really good performing YouTube videos are going to be in the 5 to 6 minute range. So we have 3,200 playbacks and an average of 6.5 minutes, which is really, really awesome. So thank you for that. And yeah, Mike says we're nearly ready to go. Yeah, so for anybody who's new, Elon is going to be joining this stream because he is going to be doing the Tesla Q4 conference call, which is going to occur at 6:30 p.m. Eastern, 3:30 p.m. Pacific time. And he's been, I think, on every single Tesla conference call in the past. So he'll be doing this one, and I will be broadcasting, or I guess restreaming Tesla's call. And somebody asked if I could explain the calculation again. Yeah, just real quick, real high level. 90 to 100 million vehicles globally. This chat came up with 10 to 12% for a potential market share for Tesla. 10% of 100 million is 10 million. 10 million at a 40,000 ASP is 400 billion of earnings. 400 billion of revenue. 400 billion at a 15% margin is 60 billion of sort of recurring earnings. And then you can put kind of whatever earnings multiple you want on that number. But if somebody said a low might be 5. So if you put a low of 5 times on that, my brain is smoking a little bit, but I have the numbers right. Bear with me. If you put a multiple of 5 on 60 billion of earnings, that's 300 billion. And then 300 billion divided by the 200 million shares that Tesla has outstanding. That's the part I need to make sure I do right. Should be 1,500. Yeah, because, right, $1,500 a share, because 30 times 2 or divided by 2 is 15. So that's the answer. And what do I mean by earnings multiple? I would just Google that, but basically, people shortcut. So the way that any stock trades is the price of a stock is represented by the future value that investors anticipate the company will generate in terms of earnings. But they don't generate all the earnings in one single year. They generate the earnings over a period of time. And so the current price of the stock represents all of the future earnings that a company will ever generate, added up, and then discounted back to today. The basic idea being that, a dollar tomorrow is worth less than a dollar today, or a dollar today is worth more than a dollar tomorrow. But the point is that you add up all the earnings over a given number of years, you discount all those earnings back to their present value that they would be today. And that gives you a price for the stock. And you take that price of the stock over the current earnings for this year, and that gives you your stock multiple. Yeah, and then somebody says that estimate that we just did is not including other areas of Tesla, just vehicles. I completely agree with that. And my very first video ever on YouTube was assuming that the auto side of the house, the auto side of Tesla, never made a single dollar in profit. What could the robotaxi business potentially be worth to Tesla? And my answer to that was $800 a share, without any of the things we just talked about. Somebody Mike brought up battery day, and I guess they're pushing it back, so they might get a question about that. Tesla was supposed to do their battery day April 2020, and obviously April has come and gone. I think Elon tweeted that they were postponing it. And so R Triplet says somebody was talking about Tesla Semi delayed till 2021. That's right. They announced in their release today that deliveries for Tesla Semi will be delayed till 2021. Yeah, and Mike is saying that the solar needs to start showing up in the next 12 months. Not only that, but Elon also said in a conference call last year, that he expected Tesla Energy, I think, ultimately would be one of the biggest businesses and potentially bigger than auto. So to the point of everybody's making really, really well in this chat, better than I am, or articulating it better than I am. The potential for Tesla is huge when you add up all the different businesses, and the numbers in terms of the stock price get crazy. They get nuts because I don't know. I could see, like, if every car in the future over a long enough time horizon moves to being an electric car, and Tesla is the best positioned, then, why couldn't they have more than a 10% market share? I don't know. I mean, I guess to push back on that a little bit, like Ford and GM don't sell 10 million vehicles a year. So you have that issue. But why couldn't they have a bigger market share in the future? And they're the best positioned car manufacturer, and they do a lot of other things, like everybody's saying, solar energy, robotaxi, lots of other stuff. Or basically, one of the experts we had in our battery day call said that you can take old Tesla batteries and put them into the solar side. And so you then have a house with a solar roof. You have a battery from your old car collecting energy that's produced during the day. You use that battery to charge your car at night. And you basically have like a closed loop system, including an exit strategy for all of the old Tesla car batteries that, as they decline in terms of their performance and chargeability over the years, you have a phase 2 for those batteries where they can be deployed into people's homes. And so it could really end up being a huge system that people live entirely on they're not like off the grid, but they're on the Tesla grid. And that's pretty crazy. And somebody's saying, Gene is saying that $1 is 18 of my currency units. So Tesla is crazy expensive for me to buy. Yeah, that's like 800. That's like 8,000. That's like all 15,000, right? Per share. It's kind of funny. What country are you from? Yeah, and Pablo says storage will be as big as solar. Yeah, and somebody's saying that analysts forget to include the ancillary branches. Yeah, and they do that because they can't see them yet, but they're there. And Matt, hey Matt from Canada, hope things are well up there, is saying that ARK is calling 17% in 10 years. That is true about the ARK number. However, the ARK number, I believe they're counting 17% as being 17% of the electric vehicle market, not the total. And then Ryan is saying, I think we may see a dip going towards or after Q2. I believe they'll continue to raise with this Q1 call. Yeah. Yeah, one of the interesting things about the interest levels in EVs versus ICE vehicles, I think coming out of this whole global thing that we're in right now, people will value clean air, clean water, and a more healthy environment much more so than they did going into it. And so some of those things, some of those consumer preferences might accelerate the adoption of electric vehicles, even though on the other side, people are saying, well, gas is free now. And by the way, I don't know where you guys live, but gas actually hasn't gone down that much where I am. And diesel is about the same as it was. So you still have to pay money to fill up your gas tank, even though oil is low. Only the near-term oil contract futures went negative. Did you guys know that oil went negative? And that's because people couldn't find a place to store it. So you had to like pay somebody to take it from you. It was pretty crazy. But anyway. Elon said he will not do a motorcycle. He had an accident. I didn't know that. I didn't know that Elon had a motorcycle accident. We should look that up. That's like one thing I didn't know about Elon. If that's true. Wow. Whoever said that was 100% right. Interesting. Elon Musk reveals the reason there will never be a Tesla motorcycle. He responded by saying, so one shareholder in the audience asked if Tesla ever thought about getting into the motorcycle business. And Elon responded by saying that when he was younger, he and his brother used to ride motorcycles all the time for about 8 years. However, it was a near-death incident that he had that will keep the electric car company from venturing into the motorcycle business. I had a road bike until I was 17 and was almost killed by a truck, so we're not going to do motorcycles. There you go. Somebody was 100% right on that. Thank you for pointing that out. I learned something new. Somebody's asking if it'll hit 1,000 tomorrow. Don't know. Let's get a check and see if it's up after hours still. So it's up about 9.5%. It's up $76 after hours, and it traded to 850. And for the people that were on last quarter, it was such a surreal experience doing the live stream last quarter when Tesla had gone on this run from like 400 up to 600, and then they reported earnings. So it was up 50%, and then it reported earnings, and it climbed even further. In after hours trading, it was up first about 5 to 10, and then about 10 to 15, and thus began a crazy run from like the mid 600s all the way up to 968.99 in February, and that's what kicked it off. So it was pretty nuts. The stock does weird things sometimes, but it's so much fun. The community is so cool of people that follow this company and like to talk about the stock and all the things surrounding it, and it's just a fun, really fun thing to be a part of. So I'm really glad that everybody is here and listening and chatting, and thank you for letting me do this with you guys. It's a lot of fun. And coming up in about 5 to 10 minutes, I guess 8 minutes, is going to be the Tesla Q1 2020 call that Elon will be on. So I will plug you guys into that as long as somebody promises to let me know how the sound is, because I want to make sure the sound is as perfect as it can be to the people listening. So we'll do that. And somebody's saying, what kind of price pump can we expect in the morning? Should I be eyes on when this thing hit 1,000 at 10 a.m. and then dumps? It's possible. It's definitely possible. Something weird could happen. Something weird could happen. And, for the people that missed this part of the point earlier, just keep in mind that for a growth company, any 1 year, especially in an early year for a company which is in its growth stage, will have a disproportionately smaller impact or effect on that company or that stock. So if we're only selling 500,000 vehicles right now, but we're going to sell millions in the future, then even if this year is terrible, Tesla Q and the short sellers could say, this is going to be a terrible year for Tesla. They're going to bring numbers down, whatever. And it just may not matter for the stock because so much of the value of this company is embedded in the future expectations of the business. Somebody asked if I own Tesla. I do. If I own a Tesla car, I do not. But I just talked about a story where I was talking about this so much and was so interested in researching Autonomy Day and Tesla Robo taxis and all those things that I went to the Tesla car dealership in the meatpacking district in New York, and I tried a Model X test drive. I told them what I was doing. I was saying, hey, I'm not going to buy a car, but I really want to check it out, and I have this YouTube channel. And so they arranged a test drive for me. They were really, really nice about it, and I'm going to do more, hopefully, with them in the future. Not that we're affiliated anyway. But I just told them what I was doing. And yeah, they let me test drive a car, and I used the autonomous driving features on the West Side Highway, which is a crazy place to drive. And it did really well. It performed incredibly well. It was a crazy experience. And I didn't even mention earlier, you have to do the acceleration test. For anybody, even if you don't have any plans in the near term to buy a Tesla, just go have them do the acceleration test for you. I promise you will not feel like you're on this planet anymore. Just the amount of acceleration that car has, it feels like nothing I have ever. It's indescribable. I think Joe Rogan said it feels like going through a wormhole. It does feel like you're being teleported to a different dimension. So I am a believer in Elon, and I'm a firm believer in the product. Somebody asked how many shares of Tesla I have. I own Tesla stock. I am smaller than I have been in the past. Not related to the company, just more related to what's going on in the economy right now. And somebody said, last night I dreamt I had a Model 3. Pretty cool. Somebody said, the acceleration made me sick. In my opinion, overrated. The self-driving, though, that's the future. Yeah, the acceleration made me sick, too. It really did. Yeah, your brain feels like it's shaking around in your head. It's true that somebody who said you won't want to ever drive a gas car again. Yeah, once you have the experience of being in a Tesla, I just think the more people that get into them and drive them and really, I mean, the car does amazing things. Like it just the infotainment system and the number of things it can do for you. It's just a fun car to be a part of. It's just cool. People love them. And I've seen reviews on YouTube of, YouTubers that don't have any business talking about stocks or Tesla, don't have any relationship with the company that I can tell, but that buy cars and do reviews on them and love them. Like I've never seen for as cool as like the Chevy Suburban is or any other car, I've never seen somebody do a review on a car like that from a legacy auto manufacturer like they've done on a Tesla. It's just a game changer. Yeah, and Ryan's saying, I'd like to buy a Tesla, but have held off thinking the batteries may improve even more. Yeah. I think a lot of people are in that mode, actually. And I may try to get this stream up just to at least try it in a second. Let me work on a couple things first. I just want to make sure that if you're new, I'm going to live stream Tesla's Q1 2020 update, and Elon should be on it. So you'll hear directly from him. Enough of my babbling. Who wants to hear me anymore? But more importantly, you'll hear Elon. Okay. So hang on, let me do this. Anyway, more importantly, you'll hear from Elon, and while I'm setting that up, let me see if I can get this going, and you guys will let me know if you can hear. By the way, thank you so much to anybody who's watching right now, and especially all the people who have been supporting the channel and supported us from early on and recently. I recognize almost a ton of people in the chat. I was going to say almost everybody. I really appreciate you guys participating and listening, and it's great to see you back here. Thank you for this. I hope everybody's healthy, happy, safe, by the way. I think that's overused these days, but I really do mean it. Because everybody watching and participating really does mean a lot to me. And things have changed a little bit in the world, but I really do put a lot of time and effort into thinking about this channel and trying to come up with new ways to be entertaining and produce stuff for you guys. And so anyway, it just means a lot when you participate. And thank you for watching this. And if you haven't, I hope you'll consider subscribing. There's a lot more to come, and there's actually a pretty decent library of lots of different topics already on this channel, but there's going to be a lot more that comes. And so I hope you'll think about subscribing for that if you haven't already. And also just leaving a like on this video. I know it's silly. I hate to even mention it, but it does apparently help. And so if you're enjoying this, I hope you'll consider leaving a like as well. And that's something that I would appreciate too. And thanks again. Okay, so just going to click over to the webcast and try to get it up, and you can listen to it directly. All right, so I'm going to try to pump up the sound, and hopefully you guys can let me know if you can hear it. So just give me 1 second. Bear with me 1 moment.
Gross margin, excluding regulatory credits, while ramping 2 major products. What we've learned from this is that we've obviously learned a lot here. After the Model 3 ramp from 3 years ago, our new products get ramped faster and become profitable sooner. In Q1, we produced more Model Ys in the first quarter than Model 3s in Fremont in the first 2 quarters. Thus far, the Model Y ramp has been even faster.
Hey, I'm going to turn it up a little bit.
Ramp in Q1. Most surprisingly, in other words, we are ahead of the schedule that we were ahead of already. Most surprisingly, Model Y was profitable already in its first quarter of production, something we haven't achieved with any product in the past. Regarding Autopilot, we released a new software update for traffic lights and stop signs to early access users in March, and to all U.S. customers with full self-driving package just last week. Our cars will now automatically stop at each stop sign or traffic lights until the driver gets confirmation to proceed. I should say that the car is actually capable of much more than this, but we are only exposing functionality that we feel quite good about, and where we feel that it is probably a safety improvement. We are collecting data from over 1 million intersections every month at this point. This number will grow exponentially as more people get the update and as more people start driving again. Soon we will be collecting data from over 1 billion intersections per month. All of those confirmations are training on neural net. Essentially, the driver, when driving and taking action, is effectively labeling reality as they drive, and making the neural net better and better. I think that this is an advantage that no one else has, and we're quite literally orders of magnitude more than everyone else combined. I think this is difficult to fully appreciate. It's the reason that it's very difficult to have a search engine that competes with Google, because everyone is training Google all the time with their searches. So when you search on something and you click on a link, you're training Google every time you do that. It's just very difficult for any new search engine to compete on that basis. So all those confirmations are training on neural net, and soon cars will be able to drive through an intersection without a confirmation, as well as to make turns. And we really feel I feel extremely confident that it will be possible to do a drive from your home to your office most of the time with no interventions by the end of the year. So this is we can almost do this already with the bleeding edge alpha builds that I'm driving in the car. So let's see, on other technology fronts, we increased the range of Model S and X yet again, this time to 391 miles for Model S and 351 miles for Model X. It should be said that actually the real Model S range is 400 miles. But when we did the last EPA test, unfortunately EPA left the car door open and the keys in the car. So the car, and they did this overnight, and so the car actually went into waiting for driver mode and lost 2% of its range, and as a result it had a 391 test. As soon as the EPA reopens for testing, we will redo the test, and we're extremely confident that we will achieve a 400 mile or greater range with the Model S. But to be clear, the Model S that for the past 2 months, the true range of the Model S for the past two months has been 400 miles. And of course, we're not stopping there. We'll always continue pushing for improved range over time, and improving handling, acceleration, and all the little details that make a Tesla special. For Model Y, we introduced a revolutionary two-piece rear underbody casting that we're going to be making a single-piece casting later this year, meaning that essentially the rear third of the body is cast as a single piece, which is no casting of this size of complexity has ever been done before. In fact, there isn't even anything that is on par with the two-piece casting for the Model Y. So we're really pushing the envelope on vehicle structural engineering and manufacturing. I'm very excited about this approach, as it allows us to reduce the weight, the cost, and improve NVH. It's better in every way, essentially. For Model Y, we also introduced a revolutionary new heat pump, which allows the car to have a higher range. So the Model Y has remarkable range, on par with, in fact, slightly better than, I guess, the Model 3. And just despite being a bigger car that weighs more. And the heat pump is a key contributor to that. It is especially excellent at low temperature driving. So, and the feedback we're getting from customers who have received the Model Y thus far has been universally positive. We're confident this product will be our best-selling product ever. So, in conclusion, and just to looking for, I guess this is a forward-looking statement. We are absolutely continuing our Model Y capacity expansion at full speed at both Giga Berlin and Giga Shanghai, and here in Fremont when they will let us continue. Localized production in China and in Europe will bring the cost down, making our products even more competitive over time. While many other companies are cutting back on investment, we are doing the opposite. We are absolutely pedal to the metal on new products and expanding the company. And we're really looking forward to being in sometime next year a truly global manufacturer with major factories in North America, China, and Europe, and a capacity of well over 1 million units a year. So there's a tremendous amount to look forward to, and we can't wait to tell you what's going to happen. Thank you.
Thank you. And now to Zach's opening remarks.
Yeah, thanks, Martin, and thanks, Elon. I'm very proud of the accomplishments of the Tesla team this past quarter. A few things to highlight and add to what Elon just mentioned. We successfully launched, ramped, and demonstrated profitability of the Model Y, as Elon mentioned, significantly ahead of schedule. And this is our second large-scale product launch since Model 3 in 2017, and it's evidence to the progress we've made on cost control and ramp efficiency. It's hard to understate the significance of demonstrating profitability of this program in its first quarter of production. Our Shanghai Model 3 margins improved dramatically since Q4 of last year, nearing equivalence of Model 3s built in Fremont. This is despite not yet running at full capacity while also managing through the production shutdown in early February. We also announced a long-range and performance variant of the Model 3 per our roadmap, which will positively impact ASPs in China. On order rates, we did not experience much of an impact related to the expiration of government incentives at the end of Q4. In fact, we exited the quarter with our highest ever backlog yet again. Aided by these accomplishments, we were able to achieve our first ever Q1 profit. Automotive gross margin, excluding the impact of regulatory credits, remained strong for all products despite charges taken in Q1 associated with production downtime. We continue to make progress on OPEX efficiency as well as our service and other margins. Our energy business was impacted as well by shutdown activities in Q1, limiting deployments. We also experienced expected launch inefficiencies associated with our third version of the solar roof, which impacted overall profitability. As I've noted before, we expect regulatory credit sales, which are credits we sell to other car makers, to generally increase with time. This can be seen by the increase from Q1 relative to Q4. And note that most of the credit revenue did not contribute to cash in Q1, and it's reflected in the accounts receivable on the balance sheet. Our free cash flows were impacted by the temporary increase in end-of-quarter inventory for all our products, resulting from the abrupt suspension of production and delivery operations. Had these interruptions not occurred, we were pacing towards a record quarter of deliveries and strong free cash flows. As Elon mentioned, it is extremely important that we remain on track to achieve our long-term plans and technology roadmap. We are taking the near-term actions required to continue those investments. Model Y in Shanghai and Berlin are proceeding as planned, and we're making progress on improving capacity for Model Y in Fremont and Model 3 in Shanghai. In the near term, our Shanghai factory remains operational, contributing an increasing level of cash flows and profitability to the company. In Fremont, we're working towards restarting production as soon as that's possible. We are also continuing to deliver cars that we were unable to deliver at the end of the first quarter. Our vehicle inventory balance increased by 14,000 units at the end of Q1, which was a headwind to free cash flows in Q1, but is helpful in Q2. Note that one of the most important aspects of Model Y in Fremont and Model 3 in Shanghai is the dramatically improved cash conversion cycle by locally producing and delivering vehicles. While sales and delivery operations have paused in many areas of the world, we are still receiving many online orders, despite inability for our customers to experience the product prior to ordering. However, unavoidably, the extended shutdown in Fremont will have an impact on our near-term financial performance, and we will need to work through how quickly we'll be able to ramp production to prior levels. More broadly, we remain focused on ensuring our cash flows are managed appropriately. Working capital management, in particular raw material inventory, is the single most important lever in managing our cash flows during this time. The Tesla team has done a great job here. We've also taken actions to eliminate or reduce non-critical expenses and optional investments, while continuing to drive efficiencies throughout the business. Overall, we've modeled many scenarios into 2021 and remain comfortable that we have sufficient liquidity to proceed fully with our most important long-term investments. It's important to note that Tesla remains an extremely agile and dynamic company, and this is aided by the substantial work we've done over the last year to improve our cost efficiency and productivity. And we have the ability to quickly adjust our spending and planning as required. So thank you again to the Tesla team for success in Q1, and we will turn to questions.
Thank you very much. So we'll take the first questions from institutional investors compiled by Safe Technologies. The first question from institutional investor is, most Tesla owners have yet to purchase or experience FSD, despite most vehicles having all the necessary hardware. What levers could you pull to accelerate adoption and deepen your data advantage? For example, could you consider offering FSD as a premium subscription?
I think we will offer Full Self-Driving as a subscription service, but it will be probably towards the end of this year. I should say it will still make sense as to buy FSD as an option. As in our view, buying FSD is an investment in the future, and we are confident that it is an investment that will pay off to the consumer and to the benefit of the consumer. And in my opinion, buying the FSD option is something people will not regret doing.
I agree, and financially rolling the upfront purchase of the FSD option into a loan in the vehicle or a lease will be the least expensive way on a monthly basis to own. Plus, you preserve the option value of increased value with time.
Yeah.
But we do understand that some customers who have ownership or have leased their vehicles did not purchase that option up front, and so this will enable those customers to spread out the cost of ownership of FSD or subscription over time.
Absolutely. I should mention, like, at a high level, our overall goal is to maximize the area under the curve of customer happiness. That is our goal, and we think that that's the kind of thing that all companies should try to do, and it's what results in long-term value creation, and loyalty begets loyalty. So our goal is always really to do the best thing for the customers, and we're confident that if we behave like that the customers in turn will behave the same way to us.
Thank you. The second question from investors is, China recently announced changes to its NEV subsidy program that disqualifies Tesla vehicles from benefiting from the subsidies. To what extent is there room for Tesla to lower manufacturing costs in China and pass those savings to buyer so they can qualify for the subsidy?
Yeah, so we are making rapid progress on lowering the production cost in China, and we're actually excited to announce on this call that we will be reducing the price of the standard range Model 3 basically tomorrow China time. So the day after tomorrow California time, but tomorrow China time. And that'll be a price below the subsidy limit. And we feel confident that that will still be a vehicle that delivers a good gross margin.
Yeah, and on the manufacturing cost portion of the question, the cost of vehicles produced in Shanghai in Q1 is already lower than the cost to produce the Model 3 in Fremont, and there's still significant opportunity left to take cost out. So fixed cost absorption from higher production volumes, which are occurring in Q2 and will occur through the rest of the year. We're not fully localized on the supply chain yet, and so while a lot of the supply chain is localized, it's not complete, and there's additional opportunities there. And so we'll continue to bring the price down and expand margin, cost down and expand margin, even with this reduction in price that Elon mentioned on the standard range version of the vehicle.
Thank you. The next question is, Andy Grove once said that great companies are improved by crises. In which way has Tesla improved or is expected to improve coming out of COVID-19?
Well, it has caused us to look closely at our cost structure and to be more efficient as a company. That's one always has to do that in a crisis, and to think about our core beliefs and what do we want to do, and we came to the conclusion that that the right move is actually to continue to expand rapidly, continue to invest in the future, in new technologies, even though it is risky. And we've talked to some of our key investors, and they support that approach as well. So, I think that there's clearly an uncertain, future ahead. It's a bit of a bumpy road, but I think the long-term prospects are extremely good. Anything you guys want to add?
Yeah, I agree with that, Elon. The prioritization on the key projects will enable us to execute more efficiently and faster on them, which I think is great. The other one that I would add is it's always been our vision at Tesla to improve the customer experience and make that as digital as possible.
Yeah, touchless delivery. So
touchless delivery, mobile service, touchless sales has been something that we've been very focused on and made a lot of progress on.
Yeah, the Tesla is the only car that you can literally order it in less than 5 minutes on your phone. You can order a car and have it delivered to your doorstep with all the paperwork and everything done. That's it, effortless.
And many customers do that.
And they're doing it, yes. In fact, a big part of it is just trying to communicate to people that this is something you can do, because normally buying a car is quite a pain. For most people, they would rather go to the dentist than buy a new car. Actually, my dentist is great, but it's really like quite an arduous thing. When the typical retail experience for buying a new car is more painful to people than having a root canal, then you have to say, whoa. And for Tesla, it is completely as easy as ordering something from the Apple App Store or ordering something on Amazon and just up to the car. Yeah. I mean, in 5 minutes, if you really went fast, I think you could order a car probably in 90 seconds.
Thank you. The next question from institutional investor is, can you give us a brief preview of the battery day by generally highlighting steps Tesla is taking to improve cell energy density and timeline for introduction?
Yeah, actually, we're just, we don't want to preempt a battery day. We want to leave the exciting news for that day. But there will be a lot of exciting news to tell, and I think it'll be one of the most exciting days in Tesla's history. And we're just trying to figure out the right timing for that. We think probably the right timing will be probably the third week of May. Not giving a firm date, but we think that probably that's the right timing. And depending upon what we're allowed to do, it'll either be in California or Texas.
Okay. And the last question from institutional investors, could you please update on progress towards development and commercialization of full self-driving? How much revenue have you recognized so far?
So just a couple of things on the financials for full self-driving. And so currently in North America, it's sold for $7,000 as an option. We take roughly half of that as revenue, and the other half of it goes into deferred revenue. That's associated with features that will be released with time. Our deferred revenue balance is continuing to grow. It's a little bit over $600 million. And so as we release features with time, at the end of every quarter, we take a look at what features have been released, associated value, and then we can release that from the deferred revenue into our financials for that quarter. And then cars going forward, once a feature is released, we can recognize that revenue. So we reduce the amount of deferral and we can recognize that revenue within period. So, I mean, this is one of what we think will be one of the most powerful gross margin levers with time as the feature suite is rolled out.
Absolutely. There's also a tremendous amount of untapped potential in the fleet out there that could upgrade to turn on autopilot, basic autopilot, or full self-driving. And that's something we will enable just as a simple in-app purchase. Or as we were talking about earlier, just towards the end of the year as a subscription. So that's just a lot of untapped potential there. That's not in the deferred revenue line, obviously, but is certainly a great deal of deferred potential that we think is a large portion of which is likely to reach fruition.
Thank you. And now let's go to questions from retail investors. Question number one. Elon has mentioned a 50% compound annual growth target for Tesla in the past. Is this still in line with Tesla's ambitions for the next 5 to 10 years? This would be 4 million vehicles in 2025 and more than 20 million vehicles in 2030. Is 40% a more realistic target?
Well, it's always difficult to predict what the macro situation is going to be. I think very few people would have predicted, the unexpected sort of, roundhouse that COVID came up with, that sort of came out of nowhere. So I think in the absence of some massive force majeure event, but quite massive, I think 50% is the likely number. It's possible that it's 40%. I would be very shocked if it's less than 40%, even with force majeure, short of World War III.
Okay. The next question from retail investors. When will you announce the next Giga? How many Gigas do you have planned for the next 5 years?
I think we will announce the next Giga possibly as soon as a month. But we may announce this as soon as next month. There's not a prediction. It's just saying, that could happen. It will certainly be within 3 months and possibly 1 month. And that would be in the U.S. So as for how many will be in 5 years, I don't know right now what that number would be. I guess several more than there are today, but I'm not sure what exactly it would be in 5 years, but some number more than today.
I'll also add that our Gigas have gotten bigger.
Yes.
And
some of them arguably could start being called Terra.
Yes, with multiple products as well. And so, the absolute number of gigafactories we may ultimately build might be less, but each one is larger. And that's under a belief that it's just significant efficiencies by having as much as possible and similar product lines under the same roof, and as much vertical integration as possible all in one facility.
Yeah.
Thank you. The next question is, can you give us an update on solar roof ramp? How many are you currently able to install per week? What is your installations per week's target for the end of 2021?
We were actually gaining tremendous momentum with the solar roof before COVID, and COVID essentially shut us down, both from the ability to install and the ability to get permits. Like the permit offices were closed, and we shelter in place all over the place. So we obviously cannot install if you can't get permits and you can't physically do it. It's physically impossible. So, but I think the long-term trend for solar roof is extremely good, and I'm confident that, let's say, within the next, year, or maybe even by end of year, we should be installing at a rate of 1,000 a week. Perhaps not in the middle of winter or something. It's taking seasonality, allowing for seasonality where it's hard to install on roofs that are covered in snow and ice. But like in say spring, I think it's installing, which is the hard part. We actually have demonstrated the ability to hit 1,000 a week burst build rate for the solar glass roof already. So that's not a problem. It's building up the install teams, building up the third-party channel installers, the roofing industry installers, and internally we want to have at least 1,000 solar roof install teams and taking a week or perhaps a little less than a week to do an install, which gets you 1,000 a week roof installations. We see demand is good, production is good, so it's really all about the install. And then, like I said, also building up the training the very diverse group of companies in the roofing industry to also install solar roof that I think will allow us to scale, far beyond 1,000 a week. We're also seeing a lot of interest outside of North America, so we do expect this to be a product that is international, and actually seeing a tremendous amount of interest from China on the solar roof. So we're confident this will be a very significant product for the company over time.
Thank you. The next question is, can you elaborate on Tesla's plan to enter the residential and/or commercial HVAC market? Can you provide some basics of how your system will work? Will you consider the heat pump water heater market as well?
Well, as I said on Twitter, I'm personally extremely excited to build a kick-ass HVAC system that also has sort of hospital-grade particle filtration, basically HEPA filtration that filters out viruses, bacteria, pollen, fungi, and also neutralizes acidic and alkaline gases. That is quiet and efficient, and these are all things we've achieved in our cars, by the way. In fact, I don't know if a lot of people realize, but the Model S and X are the only cars in the world that have a hospital operating room grade HEPA filters built in. They're very big, so but you can get to a particle count that is insanely low with our cars.
And 3 and Y have like MERV 16 or 15 capable filtration also, which is.
It's not like Model 3 and Y are there are no slouches. Model 3 and Y are also they're way better than any other cars, to the best of my knowledge. They're not quite as good as hospital operating room, but they're extremely good. Way better than any other normal car. And we're continuing to improve the filters on 3 and Y. These actually have a big effect on health, even in normal just day-to-day living is reducing particle count, and it has effect on allergies and all sorts of things. So it's really air quality is incredibly important. Even in a non-COVID situation, it's extremely important. So taking all those things that we've learned and applying them to home HVAC, I think would be, and commercial HVAC would be just very exciting. And then if you're condensing water, like why not also have it be a water source? If you have water, you possibly could then heat the water and have a water heater as well.
Yeah, use it as a heat source if you need it instead of the outdoors when the outdoors is really cold. Yeah. Or the other way around. So lots of options.
It could be a hell of a product. So we just have to, Tesla, we have a tendency to bite off more than we can chew on the product front. So we got to make sure we have a lot of irons in the fire here for new products with the Cybertruck Semi, new Roadster, and the gigafactories in various parts of the world, and spooling up Model Y and Autopilot and the solar roof and
new technology.
Yeah, exactly. Powerwall, Power Pack, Mega Pack. We are seeing tremendous demand for stationary storage, more than we can supply, at least for 2020.
Thank you. And the last question from the retail is, when will Tesla start acquiring utilities like the Hornsdale Power Reserve and Moss Landing instead of selling them battery storage? Does it make sense for Tesla to buy peaker plants and convert them?
Well, we hadn't really thought about that yet. It's not out of the question, but our brain is full. Excuse me, sir. Our brain is full. It's not out of the question. Our overarching goal is to help accelerate the advent of sustainable energy, and the three elements of that are sustainable power generation. Then you've got to store the. It's not out of the question, but our brain is full. Excuse me, sir. Our brain is full. It's not out of the question. Our overarching goal is to help accelerate the advent of sustainable energy, and the three elements of that are sustainable power generation. Then you've got to store the power, stationary storage, and then you've got to have electric transportation. But we don't have, specific market share goals or anything like that. It's just to the degree that we can accelerate the advent of sustainable energy, we think that's a fundamental good for the world, and we want to do that as fast as possible. But it's not, like I said, market share growth, it's goal in and of itself.
Thank you very much. And I think now we can move to analyst questions.
Thank you. Our first question will come from Adam Jonas with Morgan Stanley. Please go ahead.
Thanks, everybody. I hope everyone's safe and healthy. I got one question, one follow-up, and I point out I've had a root canal before, and I would agree, Elon, it was less painful than buying a car.
Exactly. It's yeah, exactly.
Yeah, it's a big problem, actually. It's a big problem.
It's crazy. Yes.
Different conversation. Zach, first for you, any real-time update on company liquidity at the end of April? Some companies have, given the circumstances, gone out of their way to give a little color on that. Just want to give you a shot at that. And I got a follow-up.
Yeah, it's a fair question. I don't have any additional color to provide. So $8.1 billion in cash and cash equivalents at the end of Q1. We're managing it very closely. As I mentioned in my opening remarks, we do have an increase in inventory of vehicles that we were unable to deliver at the end of Q1. So we're making progress delivering those through April, which is helpful for liquidity. And, as we've been looking at liquidity, we've been looking at this over the next 18 months. And there's ups and downs to the liquidity. Currently now, as we're not producing, we still have payables from Q1 that we're paying off. But then in a couple of months, we'll quickly be through that, and then we'll have a gap in payables. since we don't have any parts coming in. So it does go up and down a little bit. But, in looking at the long-term horizon, which is how we're managing it right now, we feel pretty comfortable with the liquidity position of the company.
Yeah. I should say we are a bit worried about not being able to resume production in the Bay Area, and that should be identified as a serious risk. We only have 2 car factories right now, one in Shanghai and one in the Bay Area, and the Bay Area produces the vast majority of our cars, all of S and X, and most of the 3 and all of the Y. So the extension of the shelter in place, or frankly, I would call it forcibly imprisoning people in their homes against all their constitutional rights. That's my opinion, and breaking people's freedoms in ways that are horrible and wrong, and not why people came to America or built this country. What the fuck? Excuse me. People, the outrage, it's outrage. But it will cause great harm, not just to Tesla, but to many companies. And while Tesla will weather the storm, there are many small companies that will not. And all of everything people have worked for their whole life is being destroyed in real time. And we're going to have many suppliers, and are having many suppliers that are having super hard times, especially the small ones. And it's causing a lot of strife to a lot of people.
Well, Elon, on that point, you mentioned people that gave their lives to build the country. My thoughts for you on this. There've been a lot of comparisons, drawn to the state of the U.S. economy to the early 1930s when Roosevelt began a series of New Deals and infrastructure projects, or post-World War II when Eisenhower launched the U.S. Highway Act, and when JFK launched the Apollo program, which you could say was influenced by the Cold War, clearly, and you've benefited from, and our space program benefited from. What would be your message to U.S. lawmakers on this call as we, in addition to your opinions on shelter in place, but thinking longer term, your message to U.S. lawmakers coming out of the crisis, specifically around EV infrastructure and a chance to kind of, work with taxpayers to support sustainable transport and renewable energy? I'm wondering if you see this, as a chance to make the crisis and all the loss and lives lost not be in vain. Thanks.
I think it's high time we invested in infrastructure in this country. We have a lot of crumbling highways and bridges, and frankly, when I visit China, I see their infrastructure as being much better than ours. It's great. Europe has better infrastructure. It's really quite sad. The U.S. infrastructure, especially sort of roads and highways, is where it is today, and our airports, in a lot of cases, are an embarrassment. And it's not just a question of money; it's a question of will. Sometimes we spend a lot of money on these things, but what do we gain for it? We really need to be thinking about what is the transportation of the future, not the transportation of the past. If this was 1920, do you want to be investing in steam engines or internal combustion engines? Obviously, not steam engines. So, this is a time to think about the future, and also to ask, is it right to infringe upon people's rights, as what is happening right now? I think the people are going to be very angry about this, and are very angry. It's just like if somebody wants to stay in their house, that's great. They should be allowed to stay in their house, and they should not be compelled to leave. But to say that they cannot leave their house, and they will be arrested if they do, this is fascist. This is not democratic. This is not freedom. Give people back their goddamn freedom.
Okay, let's go to the next question, please.
Thank you. Our next question comes from Emmanuel Rosner with Deutsche Bank. Please go ahead.
Hi, good evening. Question on Model Y. I was hoping you can elaborate a little bit more on the drivers of how the gross margin is already positive at such low volume. How much of it is a function of the commonality with the Model 3? What other factors should we think about? And what does that mean for the outlook for the eventual gross margin on Model Y?
Dan?
Sure. A couple of thoughts there for Y. The first is, it does carry a higher ASP. So on the revenue side, it carries a higher ASP than Model 3. And the deliveries that we started with were of the higher ASP versions of the cars. So we started with deliveries of performance initially. And so that helps create some of the margin. And that will come down with time as more variants are released and we have more of a steady state mix. But it's similar to the ASP trend that we had with Model 3 when we launched that product in Fremont 2 years ago. On the cost side, I think you hit on a couple of the buckets. The commonality is huge. It's very important. And in addition to that, manufacturing processes are very similar to Model 3 as well. And so we have experience with that both with Model 3 in Fremont and then as well in Shanghai. And it helps to have an existing factory with existing workforce and knowledge here as well. So the ecosystem to support and launch the product is there. There remain a lot of opportunities to continue to take cost out of the car. I mean, the number of vehicles that we've built in the first quarter is quite limited relative to where we'll go.
It would take cost out of the car and make the product better. So it's not make the product worse. It's any fool can take cost out of a car and make it worse. We want to take cost out of the car, figure out how to make it lighter and simpler, and so we want the car to just incrementally improve as well as incrementally get lower in cost. But for a 5-seater Model Y, we expect marginal cost of that car to be comparable to the Model 3 once we have reached say PEP to 10 or 20,000 units or something like that, and have gone.
Hey, what's up, everyone? Not sure if the stream just cut out. I'm going to try to refresh it, but I think it went off. Hey, everyone, I'm still here.
Ladies and gentlemen, please stand by. Your conference will resume momentarily. Thank you.
There we go. Aliens definitely pulled the plug. Well, not the aliens. Elon's on the side of the aliens. I wonder who pulled the plug. Guys, thank you for to everyone and ladies and girls who are sticking with this. I really appreciate it. We also got 101 likes. I know that's meaningless, but the support means a lot. It means a lot to me. And also, we're at very close to 3,500 subscribers, which is nuts. And this channel didn't start very long ago, so I appreciate each and every view, each and every subscription. It really means a lot, and thank you. And this has been a lot more interesting than I thought it would be. I mean, these calls are crazy. Oh, Clean Technica seems live. I'm pretty sure I'm plugged in. Sounds like they're about to come back on. Oh, here we go.
Speakers, you're back online.
Hi, sorry, we got disconnected for some reason. What was the question again?
Back on, everyone.
Okay, let's go to the next question, please.
The next question comes from Ben Kallo with Baird. Please go ahead.
Hey, thank you very much. Just wondering about the cell strategy. In Reno, you have obviously integrated there, but you're buying cells, I think, in Shanghai, and then what we think in Germany. And so, how are you looking at that going forward? And then, could you just talk about Mr. Mizuno and that board addition and kind of the process with adding him to the board? Thank you.
Sure. From a sales perspective, with all the partners we've had historically and in the future, we're just looking for competitive technology and competitive pricing. I think we'll talk a little bit more about this at Battery Investor Day, like how we're approaching all of it. But yeah, I mean, we don't have like one model where restricting ourselves to pursue. We're just trying to find what's best for the products and in the long run. And then the other question about the board.
I wasn't able to hear.
Sorry, we couldn't hear the second part of the question.
Yeah, I was asking about Mr. Mizuno entering the board and kind of the process behind that and what he brings to the board.
Oh, I think well, we all need a hero. But obviously he brings a tremendous amount of experience investing at the highest levels in the world, and has done incredible work at the Japan pension fund, which is the largest, I think, fund of any kind in the world. Generally, the conversations over the years, he's just shown incredible insight into how the global security markets work, and what he thinks is the way, where there are areas for reform. It seems like to have a strong philosophical underpinning about how to make the future better, and obviously shares our view regarding the environment, and just a very sensible, smart person who brings a lot to the board, and I think is generally recognized as such by many people.
I guess linking into the Panasonic relationship, maybe just how is that relationship going here, and is there any read-through on bringing him onto the board? Thank you.
No, I think this is got nothing to do with the Panasonic relationship. I mean, I have a great relationship with the Panasonic CEO. We meet regularly one-on-one and talk all the time, and so that relationship is strong. He would bring more of a broader, I think, global strategic view to the board.
Thank you. Let's go to the next question, please.
Our next question will come from Gene Munster with Loop Ventures. Please go ahead.
Congratulations on the progress. And Elon, you talked about full autonomy by the end of the year. I would love for you to walk through the rollout strategy of the Tesla Network app and how that's going to look prior to the robo-taxi stage. Are you going to gradually take over human routes with autonomous capable routes over time, or how do you see that playing out?
Well, it's pretty much going to play out as it has played out, which is we'll release more and more functionality. Before we release any functionality, it goes through extensive testing. And of course, we have a simulations team that has a very good simulation of the real world. So we run any code changes through a battery test and simulation. Then we have a global QA team, which I'm on, actually. I'm one of on the global QA team. and we test the releases in the real world, find out the differences between the real world and the simulation, which are very many because the world is very complex and weird. And then we release it to a small group of private beta testers within the company, then to a larger beta audience, including people outside the company, then to early access, Tesla owners, and then finally a broader release. And so there are many stages that these things go through. So by the time something is going to wide release into the U.S., it has gone through all of those stages, and the software that's at the very early stage is much more advanced than what people are seeing. So it's just got to go through a very rigorous safety process. So essentially we need to figure out, get very good at complex intersections, get very good at complex turns in intersections, and things like busy malls in a parking lot, or office park, or special events and sporting events, that kind of thing, when those eventually come back. Those are extra hard cases, but it's all tracking very well. I feel like the Autopilot engineering team is we just have an extremely talented group, and I'm deeply involved with the team. So we talk every week and meet every week when we can, because now physical meeting is difficult. So I have quite a deep understanding of where we are and where we're headed, and I feel like we have a tremendous amount of momentum, and we'll have the functionality necessary for full self-driving by the end of the year. Now, after that functionality is released, there's still another step, which is to improve the reliability of it once it's released, to have full self-driving with human that's supervised by the driver, and then we keep improving the reliability to the point where it no longer needs to be supervised by the driver, and we provide a vast body of data to regulators to show them that this is the case, and then presumably the regulators, depending on which jurisdiction it is, would give approval for fully autonomous cars that can drive with no human on board. Obviously, the regulatory approval process, that's difficult for us to predict with accuracy because it's out of our hands. But for the rest of it, I feel very good about where we are.
So to summarize, we're going to get owners full autonomy, some level of that by the end of the year, and then a human in the loop Tesla network app sometime, is it first half of next year? Would that be the hope?
Do you mean like when can the car drive with no person on board? Or?
With a person, initially a person to observe, would that be with the Tesla network app? Would that be early part of the year of 2021? Is that the hope?
If described as a hope, I would say that's probably a fair description.
Okay. And then, kind of take it to its end stage, the robo-taxi stage. Any high-level thoughts? I understand the regulatory is a massive unknown, but if you're going to put a guess on it, where would we start? When would we start seeing robo-taxis?
Well, I think it's quite likely, in my view. Again, I could be wrong. I'm as you see with Tesla, we're ahead in some areas and we're behind in others. Because when I give a guess, I give the guess that I think is the likely midpoint, not the point with lots of margin. If this was normal distribution, I'd give you the 50th percentile, not the 3 sigma, optimistic or pessimistic. So then that necessarily means at least half my predictions will be wrong and half will be right. I think, or they might be right, but offset by, a few weeks to a few months, in some cases a few years. But I believe everything I've ever said would come true, did come true. It may have come true late, but it did come true. Punctuality is not my strong suit, but I always come through in the end. I think we could see robotaxis in operation with the network fleet next year. Not in all markets, but in some.
Thank you. And let's go to the last question, please.
Our last question will come from Pierre Ferrou with New Street. Please go ahead.
Hey, thanks for taking my question. One on gross margin first, and your impressive performance in Q1. So there are 3 moving parts: the tailwind from credits, of course, the Model Y ramping, even if it broke even, it probably took average gross margin down. And of course, you had like Fremont being closed, shut down the last week of the quarter. It probably was a sort of an extra cost. And so when I looked at how gross margin evolved sequentially, excluding these 3 moving parts, I felt like your auto gross margin could have been up like a couple of points sequentially. So I wanted to check with you if that estimate would make sense. And then I will have a follow-up on energy storage. Thank you.
Sequential margin improvement.
Yeah. So the 3 things that you mentioned, I had a little bit of a hard time hearing the full question here because we're having a bit of network difficulty in the room. But I'll do my best here. So when we look at margin, we do exclude credits, as you have. So I agree with that. Model Y ramping, bringing down overall gross margin, I agree with that as well. So it was lower than the overall average, and that will increase with time. And shutdown inefficiencies in both Shanghai and in Fremont also weighed on margin. And the Shanghai margin was below the average as well, even though it's increasing quickly and approaching Model 3, it still is below the average. And so I think that sentiment of your question was, if you were to remove those factors, was there a sequential increase in gross margin? I haven't specifically calculated, and in Fremont also weighed on margin. And the Shanghai margin was below the average as well, even though it's increasing quickly and approaching Model 3, it still is below the average. And so I think that sentiment of your question was, if you were to remove those factors, was there a sequential increase in gross margin? I haven't specifically calculated that, but I think your intuition is right. We saw strength in gross margin across the board, as I mentioned, and in particular, S&X gross margins continue to improve, despite slightly lower volumes there and higher fixed cost amortization. So there's good progress happening both on the ASP side and the cost reduction side for our products in production. And I think this also lends itself to the power of the gross profit contribution to the company once we get through these ramp inefficiencies, we get Fremont up and running again, we increase capacity so we can spread out fixed costs and continue to execute on cost reductions on our products. We feel very optimistic about that path going forward.
Thanks. And I had a quick follow-up on energy storage, if you can hear me well. I think, I can't remember, I think from the very first days I heard you on the call, you've always mentioned that demand for energy storage is always outstripping supply, and you have more orders than you can meet. And so I'm kind of thinking there should be an inflection point in that business at some point, and it's going to be driven by your ability to add much more manufacturing capacity, like battery manufacturing capacity. And at a high level, how are you thinking about that inflection point in terms of timeline?
In terms of timeline, I think what we've been doing with both our partners and internally is looking at how to reduce fundamentally the cost of investments in new cell capacity. Because when you look at a vehicle product, there's a lot of things in the vehicle besides the cells. When you look at an energy storage product, it's really just the cells. And so to really grow the energy storage business, it's all about cell investments. And so that's what we've been focused on. And I think, not to give too much away, but that'll be one of the things we address in Battery Investor Day is how we're focused on that. And when we have that in the place we want, it'll be a lot easier to scale that business.
Thank you very much for all your great questions. Unfortunately, this is all the time we have today, and we'll speak to you again in 3 months' time. Thank you very much, and have a good day.
Ladies and gentlemen, this concludes today's conference call. Thanks for your participation. You may now disconnect.
All right. Well, that was fascinating. A lot to cover, and I bet we'll talk a lot more about it in the future. So just wanted to thank everyone again so much for tuning in. Good to see you all back here. Crazy times as always. And this call did not disappoint in terms of giving us a lot to chew on, a lot to think about. And the margin thing at the end is fascinating. We covered that a little bit earlier. But my pleasure. We had the flight attendant, I guess, tell us that it's time to end this live stream, so I will let all of you go about your day. But thank you to all the new subscribers, everybody who liked, and especially everybody in the comment and in the chat for leaving your questions, thoughts, and everything else. So I'll see you guys soon. I'm going to end it now, and have a great night or rest of your day wherever you are. Thank you, guys. Thanks for the positive comments and the positive feedback. I appreciate it. And I will talk to you soon. Take care.